Good morning. I'm trying something new here. Let me make sure. Let me see if it's set up right. This. Okay, that's fine. Weeble. Okay, everything looks good. It is April 4th, 2023. It's Tuesday. We're going to be streaming stocks, options, futures, stock market, general technical analysis, live trading. And yeah, today we're streaming on Twitch as well as YouTube. Nice. All right, let me get set up here. Got a little Yaz to get us going, get us started. Looks good, feel good. Yacht thumbnail, did I not? Ah, shoot, I gotta fix it. I love the yacht thumbnail. Get all the viewers. Good morning, Joshua. Good morning, GDM. Okay, let's see. Oh, I didn't do the titles either. Dang it. I jacked up. I forgot to set it up. I was like, oh no, I'm late. Gotta go. Alright. Bullish for sure. And thumbnail. Spy kind of rallied and then giving it back here. Okay, still getting set up here. No big 100% gap up on BBBY yet. Down 3%. Okay, give me down 0.3. No big 100% gap up on BBBY yet. Down 3%. Getting my audio somewhere. Go. Okay. You guys can hear me, you guys can hear the Yaz, I'm assuming. We're at 9:22. We got about 8 minutes to open. Good morning, Human Shop Right. Good morning, Donaro. Thanks for your likes, guys. Got 5 of them. All down. Morning, Dennis. FAI came down a little bit. Still holding up pretty well from yesterday's rally. That gas is up a little bit. Bill Gates says world making mistakes, not funding new TB vaccines. Ford Q1 total vehicle sales of 456,000, up 10%. It's pretty good. Ford rallying on that. Ford Q1 EV sales up 41%. 41% on sales. 10,000 electric vehicles. Citigroup says on crude oil, we continue to estimate that the marginal long-run cost of supply sits much closer to 60B by keeping prices high. OPEC is ensuring that U.S. shale growth plans will accelerate. Credit Suisse chairman hopes merger with UBS will close in the second half of 2023. Finland's president close cooperation will continue to build common security and defense throughout the Nordic region. Yeah, Finland's part of NATO now. Finland's president, the work for Sweden's early NATO membership continues relentlessly. The US is one of the worst countries in the world as far as corporate governance, says Carl Icahn. New York Fed survey found that Americans expect home prices to grow 2.6% in the next 12 months. Canada building permits month over month. February actuals 8.6%. Estimates were 2%. Wow. Previous was -4%. EU housing market boom ends with the first quarterly price fall since 2015. In some major US cities, the number of job postings for remote-friendly roles is hitting record levels and trending up. First Republic Bank short sellers reaped $848 million in gains in March, making it the most profitable short trade last month. Goldman Sachs stocks have generally rallied following the end of past Fed tightening cycles. The exceptions were when the economy entered recession near the end of tightening. Our baseline year-end SPX forecast of 4,000 would be a break with the historical pattern. There we go. Sorry, I was muted. So AMC came out with their news. I guess they settled on that lawsuit, and I'm not quite sure what it means. But it looks like they're going to. It's effectively going to be like a reverse split. But the market didn't like it. It's not. I don't think it's good. I think it's basically more dilution. Bullfrog up 47%. Whoa. Whoa. Those IPOs also. Why is it moving down here? MMAT up 6. Heartbeam. We looked at this one actually. Some of you guys mentioned it beat. Morning bluish, owlish, reddish, birdish. 24% for NFT gaming. Seco holding. GME's down 1% coming into open. Let's see, what do we have? I did get some BY calls yesterday on that double bottom. We'll see if I can get an exit here today. Not the same gap up we had yesterday. Birds. Birds is down 5%. Corsairs down 87 or 0.87%. EVTL, little bounce, plus 2.7. Let's see, we got Fubo, it's basically flat. GME is basically flat. MCB is down 1.23, we were short on that one, that's good. MU's up a little bit, we're short on that one too. NVIDIA's flat. I don't want to get on my NVIDIA put. Thing's way too bullish. EHG's climbing back. Wish is up 2.5. Alright. Alright. I like it. Okay, let's see. 10 seconds to open. Yeah, what's HKD doing? So that news was not good for my cash secured put on AMC. But oh, I'm so sorry. Sometimes it does it, sometimes it doesn't. Yeah, so I waited all these really years on AMC not messing with it. It's filthy. And then yesterday I'm like, I'm gonna do a cash secured put. So that didn't work out well. Let's see, Etsy's up 4%, Zim is up 6%. HKD is broken. GME is down 1.3. Getting out of my BBBY calls. Morning, Trinity. Tim's up 8. MMAT's up 6.5. Wow. Super League, KSS. They're both up. Eyes coming down here and get rid of some of these levels here. Too late to scalp GFAI? No. Look for it to show signs of support. Look for like 13.5, basically yesterday's VWAP. See what that looks like. Oh, it could keep going. I went down here a little bit. GME down 1.7. Tolls up 2.7. That ain't bad. Got you ready. I'm a big fan of the Matrix, by the way, so I love seeing you in that. NVIDIA. That's it, NVIDIA. That's it. That's it. Upo. Bird's down 5.6. Doesn't look it, but kind of yesterday's support. MCB is down 3.5. Leon Cooperman is bullish on oil and has a 20% of his portfolio in energy stocks. Wow, he's not considering a recession, I guess. Nearly half of business meetings could disappear without any negative impact to a business, according to a survey of more than 10,000 desk workers by Future Forum. What's our, I don't think we have much data today. Let's see. Factory openings, job openings, or factory orders, job openings at 10. That's pretty much it. And Mester speaks at 6. So 10 a.m. and that's basically it for today. I remember it's a short week. Zim 9.5% there. This chart looks pretty nice. For some reason, this keeps coming up on the option scanner for cash code puts, but IV is different from what the scanner is showing. Buy moving down here. I know, APE and AMC. It's halted? What the heck? The halted going up? I know, that's why the premium is so high on the puts, and I knew that. Look at APE. Yeah, they're coming together, you're right. This is happening. Is halted going down? This thing at 4.4? What the heck? I can get out of these cash code puts, I'm totally out of them. I don't think there's any way I can. I don't know which way it's halted, but it's halted. Body's up 5%. This thing keeps showing like it's up, but it doesn't go anywhere. Getty might have a continuation. Yeah, look at this thing, 4%. Charts look nice for a bit now. You still have a position on here, Don, or anybody? Halted down 13%. Is it ripped? It just halted coming down. It's weird. Zim is picking up some steam. It's up over 10% now. Zim is moving. Yeah, ML is a nice little runner, huh? Little green candle there on SPY. MU coming down. Goes up 1.3. Oh, birds. I want you to hold that level. Zim is still going 12%. MC resumed. No, halted up, Don. It opened up like down 25% or something. It halted to the upside. Halted here, I think. Buy coming down here. Zim is rallying. Etsy's up 3. Halted up. Yeah, because it opened up like 23% or something. All those AMC dip buyers. BBBY down 4. Looking for some sideways trading on this one. Sideways would be your friend if you're long. EVTL moving up 2.6. Got some explaining to do though. Birds. Not sure if this is a false break yet or not, but I'm not liking that. Dang, I totally formatted into this one. Got 86.5. Weird stuff that's on my watch list now. It's green. SPY now red. GME is down 1.3. Zim's up 14. BBY is coming down. EVTL is hanging on. Wish down 2.4. AMC is kind of bouncing on that $4 level. Pre-market was 364 for the low. Zim 15%, 15.5%. This thing's going. I don't know what's the news on it. They have didn't have earnings. Oh, ex-divvy? Today's the ex-divvy date? So don't you have to own it 2 days prior? Or own it by end of today? It's just a dividend pump right now? Dividend's still crazy, isn't it? This one's even higher. That's wild. SPY moved down. GME holding up alright, 1.5%. BBY still hasn't broken yesterday's level. Right about there though, right? Support 3.6. MC is down 19%. SPY getting to that pre-market low, or really after hours low, which is 410.41. It's a pretty big flush right out of open. If there's any news. I don't see any news. Might be a good long here. We can hold some kind of support. Stellantis, BMW in talks with Panasonic over new EV battery plants in North America. Stellantis sees Panasonic as possible partner for third North American EV battery factory. Just oppose with some TA. I'm gonna break over this red line. We rally. Zoomed-in view to show how price has interacted with those two longer trends since earnings on the one-day scale for the last 2 months. Yeah, I've got this line actually for support. The bounce on SPY. AMC is down 20%. Back to that $4. GME down 2%. Oh, BBY down 7. Broke yesterday's low. Flushed through it. So 35 cents. 35.51 is now the low on there. 30% of US teens use TikTok, 27% Snap, 23% Instagram, 3% Facebook. Thanks. Ooh, SI down 5. Do I still have SI? No. Yeah, I didn't even see this rally it had end of day. MU down 1.5. CB down 3.5. Looks like MU moves kind of with the SPY, huh? You get a notification. Oh shoot! I totally forgot to do it. Yeah, I'm a little unorganized this morning. Let me do it. I'll do it. On Discord or you mean the YouTube notification? Wheels up's up 5%. GME down 2.3. I'd like to see it hold this 22 level. We do get back down there. Get a totally forgot to do it. Why is bounced on that level? YouTube is finally shadow banning me. Oh, you didn't get a YouTube notification? It's maybe because I'm using Restream. It's maybe not. Maybe it doesn't send it out. I don't know. There it goes. You just got a notification on YouTube, or are you talking about Discord? Because I just sent it on Discord and Twitch. Or sorry. Twitter. EVTL 3.7%. That is neat. Look at GME bouncing right on that same level. I guess that's a good sign. Better than bouncing down here. Holding it up. Getty 8.5. AMC only down 18% now. Kind of holding up all right. Wish down 2.5. It's down 1.3. Discord. Okay, yeah, that makes sense. Oh, let's see, Vital, what do we got? I've got a lot of open options right now. It's been a while. I want to close them. It's too much. HKD down 1.4. I've got a stop loss on here somewhere. Oh, it already triggered, I guess. I'm out of HKD. I'm out. Is BY at 35 cents? Oh, it broke 35 cents, so yeah, Probably 30 cents then today. Yesterday didn't have as big of a drop as the days before, though. I mean, you know, give it that. Days before it was like 20% drop. Yesterday I think it was like 10 or 12. Maybe it's slowing down. 14. %, will put you at 30 cents. There you go, MCB. Let it go, man. Fill the gap. That's all you gotta do. Fill the gap. Micron, is that kind of a head and shoulders? Am I being cheeky? Yeah, Micron just kind of follows the SPY. Not one I've really watched. SPY did bounce right on that level. Considered a long. We'll see. If it comes back down and retest, maybe I'll go long. Didn't presume it would just straight up be, but COM. This thing's getting wrecked also. Not as bad as BBY, but wheels up. Moving up 8% almost. EVTL 5%. Making back some of its losses from yesterday. That's good. Nice bounce on $1.87. Look at that GME right on cue, right on that line. So acting resistance, now acting as support, it would appear. That's good news. So dip buying on options would be here, not 22. Presumably. Got one more? Yes. On the most on this 25. Get just one more 25 for January. BBBY bounced a little bit. I'll wick down there to 34. Back up to 35. Still no supports because this is all-time lows, so every day new all-time lows. Zim holding up well there, 11%. Getty also 9.4. Microvast 4.5. Chart looks pretty nice. There you go, EVTL. I forgot when to cut losses on VHC. Or just ride it. I guess it's basically worthless, yeah. I'll hold. Maybe it'll be crazy squeeze play. In order to close my NVIDIA put. I think it's too early. Up, still going, almost 10% there. Oh, AMC broke the low. Right at $4. Pre-market's at 3.6. To do with this cash secured put. Tempted just to hold it and then roll it closer to expiration. See what kind of rolls I can get on it. Try and roll it. A little credit to May. Whoa, big rip on SPY there. What the heck? Oh, data just came out. It's right at 10 o'clock. I just actually got my NVIDIA put filled, so just in time. Good morning, Christopher. I guess the data was good. Surprised it had that much of an effect. US factory orders month over month. Actual is negative 0.7%. Estimates were negative 0.5%. So economy's doing worse. That's good for the stock market. Previous was negative 1.6%. US durable goods orders February was negative 1%, which is what the estimates were, and also what the previous month was. Or no, was that year over year? No, that's just actual. US JOLTS job openings was 9,931,000, and estimates were 10,500,000. I think I read that right. Market had quite a reaction to that. Up 10%, Zim 12. AMC broke that $4 level. 377. Kind of that next support. 385 or somewhere in there. Yeah, 380. 380. Can't believe how low the IV is on GME. There's a wick back down. Party's over. It goes down 1.3. I liked this chart. The only thing I was missing was an open and close over that 9 moving average. This divergence on the RSI was, it wasn't perfect. I think it'd still be due, but my options I only have until April on it. For monthlies. I'm moving back up on that candle. EVTL up 3.7. Birds bounced good. Wood bounce. That was me. Did it rally? 1.23%. Yeah, just grinding on up. Yeah, I was a bit early on my NVIDIA puts, so I closed them. Wait for the SPY to kind of be hitting a top more and then maybe jump into NVIDIA puts or something.
Under a little bit more pressure with this data point indicating that there are less openings in the job market.
You know, this has become a market-moving number. We were talking about it this morning, the way this has worked its way into kind of like the top, 5% of economic data points.
Yeah, that's kind of crazy.
Why do you think that is, Dan, the fact that, we get such a big response off a weekly figure that used to just kind of go overlooked,
Right.
Phase at 5%.
Well, the market's so sensitive right now to the job market because that's the one thing that's underpinning the Fed, as far as their initiative to keep moving rates higher. So I think that's the primary reason, Oliver, as the job market has been very tight for an extended period of time. And the idea of seeing less openings means that potentially there's going to be some cooling off in that regard if we continue to see those openings decline. So therefore, there'd be, in theory, less demand for those jobs, So the opportunities would start to reduce, and that could put pressure on the unemployment rate, which then the Fed would maybe have to shift their policy. So I think that's the real reason why market participants are so focused on these numbers, particularly in the employment front. Even the weekly jobless claims number has become more important, Oliver, recently, just because of the fact that the market's very sensitized to any shift in the job market.
Okay, at some point it seems like this trick won't work, but who knows? You know, maybe this time is different. You know, where slowing economy might be good for stocks, but ultimately, you know, we see stories about layoffs happening now at Apple. So
yeah,
you know,
McDonald's too.
Yeah, McDonald's, Walmart, Apple. I mean, it seems pretty clear that economic, you know, slowdown is a meaningful thing. But I mean, look, the stocks are still doing great. I mean, Apple's had a huge run over the last 4 months.
Well, the idea of lower rates has certainly helped the tech sector and the growth area get its sea legs under it after last year's kind of washout. So that's surprising, Oliver, I think, given you know, because of the way that they're valued and the idea that if rates do come down at the end of the year, then in theory they're worth more now. But you know, that's it's worked its way through the market. So now, really, I think a lot of the mean reversion has been taken out of the market. So, yeah, it's going to be a challenging environment for the equity markets, I think, moving forward, as we still are uncertain as to how the fallout is going to unfold. When you look at you know, the economic activity and the Fed trying to slow things down and reel in inflation, but not slow things down to a point where it becomes significantly recessionary, which you know,
not necessarily.
You know, be careful what you wish for type of mentality, as you pointed out.
We just don't know what they're doing.
To this point,
and
you know,
to
we're
me, a
seeing
lot of
enough variance in the data points to indicate that things maybe are slowing down a little bit, and particularly when you see a number like this morning. And at the same time, you know, the economy hasn't really fallen off a cliff. So, you know, I guess it's cautious optimism, but, you know, that certainly is something that, you know, could be challenged very quickly if we see a shift in some of these data points.
All right. Like it, Dan, the other thing that stands out to me is what's happening in gold today. I mean, the response here, to me, is pretty interesting. I know that the market's trying to rally. But gold catching the strongest,
all the speculation on
their
debt,
highs,
how they restructured it, to me was
something unique to me almost.
Since they terminated that,
I don't know. 21 from back in 2020.
Wasn't much there. I don't know. It just seemed like HCB.
It actually does.
Made their 8% or whatever it was, and
I mean, yeah, I think that it is
didn't have any
interesting
plans
dynamic. I mean, some of it is the lingering aspects of what took place in the banking sector,
company.
Oliver, and that's still going to be. I mean, there's going to be a certain amount of market
participants
that don't feel that we're out of the woods yet, and so that's
and BY maybe
possibly
woke up to
one
that
reason
and was
why
like, all right,
gold
we're
continues
terminating
to
that. Just going
realize
to do a
this
share
higher
offering.
price action. But also the dynamics of if the Fed does start to unwind
or there's some
the
big
interest rate pressures,
elaborate plan
that the rest of the globe is, you know, still ratcheting up. And, you know, it's that
time goes on, the less likely that would be.
Point where we reach where the U.S. was ahead of the curve last year that helped the dollar. Now, if we start to lead interest rates lower in the second half of this year, which the market's still pricing in, even though the Fed is saying they're not, that the dollar would probably come under some pressure. It already has, and could you know, continue to realize further downside. And so gold's going to be an alternative store of value, and that's, I think, one of the reasons why. And couple that with Bitcoin also now showing signs of possible viable storage of value. I guess it depends on how much risk you want to take, but at the same token, you are seeing money flowing out of the dollar into either other currencies or into gold, for that matter, silver catching a bit as well. So I think it's just the flow of the money flow based on some of the dynamics underpinning this market.
People still think HCB or
we got a pretty interesting session here. You know,
involved
NASDAQ unable to take off. To your point, Bitcoin, you kind of think also moves with the NASDAQ, likes the weak data, maybe putting the Fed in a tricky spot. But wow, gold is the winner right now.
It is
up 1.5%. Real strong move.
I mean, you're going to get most likely a bounce on it, even if they do file for BK.
That's a big jump on bond
that might be the catalyst.
Thanks, Dan.
You just have to know when to take profits on it.
Thanks,
and you're getting excited, and it's up whatever price.
Wow. So the market here really trying to
you've got
process
to,
a slowing
at some point, you might have
in the
to
economy.
decide to
And some complications
realize
for oil,
losses
though.
and
Keep inflation lingering in the back of
just
our minds.
how much losses
Talk
you
about
realize.
the fallout from the OPEC cut with Kevin Green, our senior markets correspondent, taking a look at some of the energy stocks that are now catching love from Wall Street. No
You know what I mean? If your price is $5 a share,
I would think, Kevin,
your cost basis, and it rallies up to $1.50
energy into these
or
energy
$2,
stocks here, and they
got
actually
all this momentum,
saw a little bit of a
but then
sell-off
it
here
stops.
after we saw crude oil and
you might have to
hit about $120.
That's a tough
Ever
one
since then, moving
when
to
it's
the
got all the right
downside here.
momentum.
It has been a
But you're still
crowded
negative
trade,
on
but
it
the
to
valuation
then
starting to get a
close.
little bit lofty, and we also
Those are hard to
starting
close.
see crude oil come to the downside, and that's also going to squeeze margins here.
But it depends on the
right now,
catalyst and why it's
we are
rallying.
seeing
If
it
it's
catch a
bullish,
little bit
then
of
you
a
can
bid.
just
You
keep
already talked
holding.
about gold, also
The company's not going
hard
bankrupt. It's
commodities as well as,
undervalued.
Crude.
That's still definitely the case. It's even more undervalued now.
A little bit of a tell if it comes to inflation. Who knows? We don't know that as of yet, but we do know that we are entering the seasonality trend here, where crude typically goes to the upside because demand gets higher here in the United States than in Europe here. But we did see Exane, BNP Paribas. They actually upgraded Chevron to neutral from underperform with a new price target of $200. Now, the analyst actually prefers upstream exposure for global oil stocks in 2023, and that's actually exactly where Chevron really focuses on. If you look at their earnings mix, 86% of their earnings come from upstream operations, and that's really just focusing on oil discovery, extraction, and production. And if you look at it all as well, about half of their production when it comes to upstream is going to be here in the United States, and the other half is going to be internationally. So they have a pretty diverse mix when it comes to extraction and production mechanisms here in the marketplace here. Now, the analyst does note that there is some anxiety going into earnings season when it comes to this energy companies, because obviously crude oil did move to the downside, margins do contract, but they are also very bullish when it comes to the amount of distribution that these oil companies have been able to provide to shareholders, whether that's stock buybacks or even a dividend as well. So that's where they are feeling a little bit more optimistic when it comes to this name. And what's also interesting, Oliver, is the offshore drillers are also seeing a little bit more of a bid than maybe some of these integrated companies, because of the fact of the OPEC move that they announced here yesterday, where they're cutting oil production by about 1.1 million barrels per day.
So basically everyone in my house is throwing up.
If we need to, as the United States and the EU, to be able to try to double down when it comes to oil production, that's probably going to be the area of the market that they want to focus on. That would also then cause those rig rates to go up, which is why we are seeing this catalyst move to the upside here for those offshore drillers. So yes, we are catching a little bit of excitement in the energy market. Let's see if it's going to last.
BBBY is strong.
Analysts starting to come out and put price targets on crude at $100, $110, kind of that froth that we kind of saw last year, where it never really came to fruition. But the dynamics have definitely changed since last year.
Okay. Yeah, the shift here has been a pretty sharp one. In both directions, with the big slide in crude prices for months, and then a breakdown within the last couple of weeks and rip right back. I mean, definitely from the commodity standpoint, living up to kind of the trader association with this as being a pretty volatile asset. But I guess the point about Chevron and some of the others is that
I don't think it's coronavirus. We never threw up when we had that.
Volatility
I think it's just like a food poisoning or stomach bug.
Yeah, definitely. They're not
we
trying
did,
to
I think, get like
that much at this point in time.
Corona
You can
flu
kind of see the writing on the
at
wall
one point
where not
a
only
year
the
ago.
US
That's
economy,
what it seemed
but
like.
the global economy is really trying to
it was a weird,
focus
just
more on
24-hour stomach bug,
alternative
but
energy
it had like,
sources, obviously because of the stability here, which is why
I don't know,
we are
it was
seeing
going
this
around the whole
plunge.
country at that time.
If you look at it, the Saudis and
I just talked to my brother, and
really have
he said his family had this
if you will, when it
stomach
comes
bug
to
that they all just got in like 24
prices.
hours.
Once it hits around that
like
$75
weeks
range,
ago.
we start seeing
Maybe
them
it's the same
ratchet
thing, I
up.
don't know.
And when it comes to their rhetoric of cutting production, and
or maybe we should have bad
a lot
chicken.
of these energy companies would rather be able to have higher energy prices and not expand. It's a little bit more of a stable business model, if you will, and they're able to provide, shareholders value if it comes to dividends or share buybacks and things of that nature. So there would have to be a pretty significant incentive for them to start expanding operations. A lot of
you've got reverse split
rigs, especially
you've
onshore,
got even bankruptcy,
it could take up
or
to
catalyst
2,
maybe
3,
for it to
even 4
rally.
years in order for them to turn profitable.
And of course, whatever filings they come out with.
Dynamic is going to be 4 years from now. We did see oil go negative a couple of years ago. That was kind of
I think at this point even
situation. They continue to drill.
Well, no, I don't think they've offered the shares yet. The price is too low, so they'll probably have to. It'll probably have to either rip or they're gonna have to do the reverse split before they come out for shares.
Be reluctant to be able to expand their operations in fossil fuels, but they are expanding their operations in alternative energy, and they also are expanding their operations when it comes to
they get a little
capture.
support
That's
there
kind
on
of the new marketplace here
level
that
today.
they can actually tap into to get tax
we'll see
credits.
if it's slowing its downtrend. That's even before flattening out.
Thanks, Kevin. A
going
more
down less.
nuanced business than just a pure crude price trade. So that is helpful in that Chevron, did better than the actual commodity price when it was down as much as it is, but it also means it's a little bit more sluggish.
I don't know.
On the big
believe it or not, bankruptcy.
Like we got yesterday.
Bullish.
They tend to benefit some more of the
believe it or not, still bullish
style trade, but still a pretty good report from the analysts. Let's trade it with Tim Big.
I'm not sure it was surprising to me that they even announced the reverse split when they did. That they're considering it. That was another part of the speculation and hype. It seemed like maybe
the past couple of days since the OPEC plus,
maybe a trigger to
the cuts here. I think
scare
it's a
shorts.
good time to be maybe examining.
I don't know, because it was unusual because they were above $1. They hadn't been below $1.
We've seen these price targets,
and like I've said many times, you can be trading under $1 for a long time before it's a problem.
To fruition here, so I'm getting a little bit
months and months and months before you can get a notice, and then if any time you go over $1 in that time, it's reset like another 90 days.
Such a run up here. Chevron,
and then you can always file extensions, and they should always give them.
And that signaled pullbacks
in the past here. Stocks trading $1 for a long time. So why they did it then is
at about the lowest level we've seen in the past year.
Crazy
trading,
master plan also,
about
but
the 8th percentile.
Not seeing anything from it yet.
Option price is getting cheaper.
The fact that they changed it 2 to 20 to 1
so I just
makes me think that they're probably going to do it though.
Here on both fronts,
and I think they would have to now to get the share offering.
Next month, the May.
So GME's coming down, SPY,
170 puts.
Pretty big red candle there too.
Selling the traditional April 165 puts, paying under $5 for that trade. So if we do have
big
that, inevitable, I think, pullback in oil, that bad hair day, this spread will benefit not only from a price move down, but I think implied volatility will pop back up.
Oh, it's actually below that level.
I always like kind of, baiting these moves on the oil stocks when everyone comes out and says oil is going much higher, because if you look back in past history, it's never really come to fruition.
All right. The
9 made that island bottom.
Starts for energy have certainly left some a little scarred here, so you'd rather be selling downside than buying upside, it seems like.
Yeah, absolutely. I think,
if you reversal there. I don't know
what position I would have put on, a couple weeks ago. I would have the exact opposite position.
It's like we're just starting to get into the chop range like we did back here.
Was a lot higher in Chevron. Oil prices were lower. The stock was much lower. But given the move we've seen in oil and oil stocks here over the past several days, I think it is getting a little bit out over the skis here. So I'm not really looking for a massive pullback in oil or even the big, oil names like Chevron, Exxon, and the like, but just a kind of consolidation and a slight pullback, and that'll set up nicely for this trade structure. Plus,
dollar's dropping heavy today
after the April position expires to continue to bring in a premium. Earnings aren't until after traditional April expiration, so I think that plays into buying further out May's and selling in front of earnings. April's here as well, so I like it on a lot of fronts here. I don't think oil is going to go rip-roaring to the upside from here, but we may have seen the lows in oil down on that $70 level as well.
Okay. Yeah, jobs.
All right, I like that. Seems like it makes sense. Kind of carving out a range here.
Spot gold extends gains, surges 1.2% to over 2,000 after U.S. economic data.
Thank you, Tim Bingham.
You bet.
The trade, okay.
Precious metals are all going.
Put spread into Chevron. And
Russia says Finland's NATO ascension
All right,
carries risk of escalation. World War III.
Emerging markets, and let's broaden out from our domestic convo this morning. Derek Aswell joins us on the other side of the break, and check this out. Stocks are
maybe that's actually what triggered this.
So we're really testing
that tweet came out at 10:20
because that was a real clear break in the jolts. One of the key jobs indicators that has told
It doesn't
the
seem like
Fed
that would do that, but maybe.
employment remains strong, has allowed the central bank to keep hiking rates. So a number like that, oftentimes when it comes in soft, will put a bid into the NASDAQ in particular.
Almost in
but we're
low of
kind
the day.
flailing here,
No,
so
I don't think they're
perhaps that
diluting here.
narrative is,
I'm
running
pretty sure
on
they
fumes
can't.
at this point. Keep your eyes on it.
The stock
Still
price
early.
isn't high
Be
enough.
right back.
They need the reverse split or to rally. So that should be a low on the day. Yep, low on the day on SPY. 41% up on NER. Is this a SPAC? No, it's not. It was, yeah, it was a SPAC. Little de-SPAC action. SPY, pretty big flush there. Oh, did I get the... I did, I got the other GME call. It's just scary when the market's moving down so much. I feel like GME's just gonna move with it. But GME's chart looks pretty good still. Very good. That's a big red on SPY. So BBBY is down big, 14%. Yeah, all-time lows on BBBY. Well, it kind of wicked down to that next level, 409.88. It's peak from yesterday. Might use that as support. MCP is not really dropping with it. MU is a bit. Dude, look at that, GME. Still bouncing on that level. Was that from that tweet? Chinese regulators recently have slowed down their merger reviews of a number of proposed acquisitions by US companies.
Towards those countries and those stocks that are related to commodities is going to be a great opportunity, because as we get a shift towards these more cyclical industries, not a lot of liquidity there. It's going to push those stocks up fairly rapidly, and there's a long way to go to get them back to where they were 10 or 20 years ago as a portion of emerging market opportunities.
Coming into this year, we heard a lot of analysis about how valuation disparities favored international stocks in a big way. Some of that seems to have been realized, where many of these international indexes are doing better than U.S. stocks as everything has kind of gone up this year. But what needs to happen for that to sustain, and where do we stand in terms of that relative valuation appeal?
Yeah, you're absolutely right, because for the last 10 years, the S&P is, let's say, it's basically tripled, and emerging markets have really gone nowhere. They're up like 10% total over that whole time period, not a year total. So the relative valuation is as high as it's been in 2 or 3 decades. And so But that's nice. It's been that way for a while. How do we realize some of that? I think the key right now is the dollar. The dollar had, up until the fall of last year, the dollar had been on one of its strongest runs ever and was as high as it had been since the late 90s or early aughts. But now we're seeing it turn. And there's a lot of reasons for that. Primarily, one of the biggest drivers is relative interest rate activity around the world. We've been raising rates here in the U.S. very rapidly, but it's getting pretty obvious right now that we're getting pretty close to a top, particularly when you saw what was in yesterday's ISM data, that there's not too many more hikes in the pipeline that we can see in the foreseeable future. But other parts of the world, rates are still moving up. Europe is still raising rates. Japan is starting to back off of its yield curve control, not openly, but the market really wants it to and is really pushing it to. You may see Chinese rates raise a bit because they're reopening their economy. So on the margin, rates are stronger overseas. That's going to push money towards away from the dollar. And when the dollar is weak, emerging markets historically have done very well.
Now, what's interesting here is that kind of trade-off, the baton being handed from the Fed with the early aggression on rate hikes to now the rest of the world, which is a little bit behind. I mean, using China as an extreme example, right, as they had been closed up for literally until a couple of months ago. So maybe at some point down the road they have to tighten things up. Bank of Japan, like decades behind, of course. So will that still be just a window? Because if the rates have the same effect they did here, it looks like they're slowing down our economy. So will it push some money over there before they slow down too?
Well, what's interesting is that, well, first of all, emerging markets are growing faster and always and have been for a long, long time. So that's not news. But what's also interesting is that inflation is not nearly the same issue that we've had in the U.S. or developed markets in general. For example, last year, our inflation in the U.S. roughly, around 8%. Emerging market inflation, and remember, we're talking about economies that include places like Turkey or Argentina, overall about 5%. And more under control, so they're not as concerned about that and do not see the need to necessarily stomp on their economic growth to curb price actions. So there's the long-term fundamentals that could drive emerging market performance are definitely in place and could continue for some years.
The dollar right now, it's trying to stay above the year-to-date lows, taking a big hit after that JOLTS number here this morning came in light. What's the view that you have, the relationship between the dollar and those international markets, and then maybe also kind of the direction for the dollar? Typically, with kind of the textbook is dollar goes down, good for the international trade on a relative basis. Is that still
just
the way it
works? Looking at the naked put screen
yeah,
here.
It's definitely still the way that works. And it's not just the currency effect. It's not just, well, sure, the stocks I bought overseas are now worth more, worth less because of that exchange rate. It's also the fact that once you start establishing this downtrend in the dollar, people start to have more confidence in investing overseas, and particularly that applies to emerging markets, where sometimes people feel that there's risk involved.
That looks pretty good.
And so they feel better about knowing that when they put their money into these stocks, that a year or two down the road, they're not going to be worth, there's no headwind there of currency. It's not going to be worth less just because the currency moved. And that goes a long way towards building positive investor sentiment towards emerging markets. And as really, if you look back in the aughts, you can see that relationship, a very strong one over a long period of time.
Derek, do you think it makes sense for investors with that kind of long-term perspective that might generally their long-term accounts be very domestic-based? Should people be shifting, have a bigger portion in international stocks? And do they do it with, I guess you would argue with an active manager like yourself, or do they need to get like specific regions that
kind
look
of
strong?
just below that
How do
trend
we
line.
apply this into our long-term planning?
Yeah, sure. So if you're taking a global perspective on investing, the U.S. is almost 2/3 of the global market now. So there's a lot of risk there. We can see this banking crisis and how much it resonated in markets because it was such a huge part of the equity market. Emerging markets are 10% or so. Having a 20% weight there would not be unreasonable at this part of the cycle. Gives you more diversification. and gives you opportunities to enjoy that potential performance. On top of that, it is also an area that particularly now is not that well followed. So there's lots of opportunities now for active management to add value into this space. There's a lot of small companies, small countries that we could invest in where we can make a difference. So you get the beta of emerging market opportunity and the alpha opportunity that active management can add, all put together in one package. It's really attractive right now.
Okay. Few stocks that you're looking at, nothing like commodity-centric, it seems. The largest commercial bank in India is one of them. Tell me about this.
Sure. HDFC, biggest commercial bank in India. So this is kind of one of those, you always want to have a few sort of rock solid pieces in your portfolio to kind of keep things going the right direction. And HDFC fills that role. Broad-based growth across all sorts of different business segments within commercial banking, solid asset base. It's been stable during inflationary periods, and recently just acquired a large real estate lending group. So they're diversifying what was already a diversified business. So we have a lot of confidence in HDFC, but we're really going to we want a handful of those in there. We also like to find some of the smaller stocks in these areas in less followed countries, and that's where we're really going to get our alpha from. Okay.
Is Dentium one of those smaller overlooked businesses, a Korean dental implant maker?
Yeah, so that's about $1.5 billion U.S. market cap, South Korean company. They've really been expanding their margins over the last year and a half or so. Although revenue growth has been fairly flat, now we're starting to see signs that the revenue growth is going to improve considerably, and the market is expecting that will translate right down to the bottom line, given what they've done with their margins. We think there's about, let's say, 30% potential appreciation in the stock within the next 6 to 12 months or so.
Really fun chat, Derek. Thanks for the specifics, taking it all the way down to a couple micro stock picks. Good stuff.
Bet. Always a pleasure.
Thank you very much. Derek Iswell, Chief Investment Officer at Shelton Capital Management, making the case for the international outperformance to continue. Dollar getting blasted this morning seems to go right in line with that thesis. Chartmaster, when we come back, we're taking a look at jeans and parts, fasteners, as well as a little biotech. Quite a mix as we pour over a few analyst notes this morning.
SPY had a nice bounce there. Not sure what that sell-off was from. It almost seemed like from that tweet. Weird. Zim 12.3, holding up a nice bull flag there. So ex-dividend dates today. I think you had to hold it before, 2 days before though, or is it today? I never know. I always get this confused. Rallying today, like you have to hold it by today. But what? EVTL 4.3, phase 4.5. AMC bounced at 39 cents. Ball. Dang. Birds, are you doing it? You are doing it. Things so volatile. I'll just hold those shares actually. What I need to get out of is the calls.
Basically just looking for a return to those yearly highs right over there.
In a short week, probably going to be pretty slow.
As well,
and the data's not till Friday, which market's actually
64.75 are not far beyond that point here. So they're really looking for some strength to come in to this name soon. However, we did break out of this symmetrical triangle type pattern. We have two trend lines converging toward each other off the highs and off the lows. And we broke out from that point with what looked pretty good on Friday. We had a nice strong candle that finished near the highs of the day. We broke above the value area. We're above all three of our moving averages, which are trending upward and diverging farther apart from each other. However, today things are kind of, maybe falling apart a little bit here. RSI, our measure of momentum, is actually trending down when we're making new closing highs, but the momentum is worsening here for the bulls, so that's not a good sign. That's not really what you'd want to see on a breakout here. The 55 level around this point, that's the point we want to beat over here. And one thing I want to point out here, if we could zoom in a little bit, we can take a look at our support and resistance more closely here. Around the 55 mark, just above that, is our old highs. You can see this red dashed line here. Perhaps look for some support.
GME kind of moving down
right
with
here
it.
At our old trend line, right around the 53.25 or so, right around that mark. Below that, we've got our 21-day exponential moving average near roughly 53. So some fairly clear-cut areas to watch out for in this name here.
Okay. All right. So pretty nice little potential here. If it can hold, we just need to keep that, at least the 53, maybe even kind of a little above that, and hold the breakout that we made. So Fastenal trying to make a little move.
One last thing here, consider we're forming a bearish engulfing candle today. Our big red candle is completely encompassing the real body from the previous day. So watch that as we head into the close. That would be another bearish sign.
Nice. Okay. So really needs to avoid that to try and keep some of this upward momentum going that it's got in the short term. Nice. Interesting chart for Fastenal. A little sideways triangle trying to turn into something bullish, but short term, maybe a little pushback here intraday as the stock turns red.
There's a little flush on GME.
We've actually got a few even more bullish notes out, Renita, in Sarepta.
Yeah, 22,
and
looking for that to hold.
Let's talk PVH and talk some close here first.
Yes, because PVH is the owner of Calvin Klein, Izod, Tommy Hilfiger, Warner's, and it got a price target hike over at UBS took the price target to $115 from $92 a share, keeping a buy rating on the shares. That's about a 28% move to the upside from where it's trading now. Now, this company is facing the same macro conditions that every other clothing retailer is facing, right? And the analyst over at UBS says that despite those macro headwinds, UBS thinks that PVH has actually got the brand strength and the balance sheet to be able to drive earnings growth over the long haul. And so the analysts are seeing this company as delivering a 5-year earnings per share compound annual growth rate of over 15%. And they say that the firm's CEO, who has new ideas to be able to drive margins, they say that he's only just started executing his plan to be able to drive that margin growth. And that when he does, they think that
near that level that we have
a
drawn,
major
22,
margin
15 or so.
Unlocking that takes place, and that will
Need
play
to
out
see
over
these
the
levels
next few
hold for me,
years.
or I'm going to be
pretty bullish,
flipping short
not bad
on
looking
GME.
chart either, I don't think. Rick, is this a return to form pretty close to the highs for PVH that we just put in earlier this year?
Yeah, it's the earnings gap that we saw up recently.
Yeah,
kind
markets
of
closed Friday, Good
reshaped
Friday.
the whole landscape here. For one thing, it just
Futures
shattered
markets will
this
stay open,
downtrend
though,
we were in with this
so
20%
they'll be
move
affected
up.
by the jobs
we
data.
filled the gap that began here. We broke through all three of our moving
Bonds
averages,
might be
our
open also,
21-day
I'm not sure.
exponential
Or no, not
in yellow,
not jobs,
63-day in orange,
employment.
252-day in purple. We also broke above our previous
employment rate.
highs near the 83 mark as well.
Hourly wages.
One thing that stands out to me is that it looks like
All
we're forming a node
GME.
here in terms of the volume profile that suggests that people
All
are
this time
willing to
consolidation
show some
just to-
conviction
just
at
to
this
flush.
level. We're establishing perhaps a bit of a foothold here around this $90 mark. One thing that
the case?
also stands out is the RSI. We are
That would be a
little
topping
bit
signal
short of
for you on
that
SPY too,
overbought
really.
area, but still looking quite strong here. We'd want to see some
This is an RSI
crossover
divergence on
above
the
that
hourly,
overbought
actually.
area for the bulls. That would be a good sign for them. So
411, is that
a little
it?
bit more to check out our
all
support
SPY
and
has?
resistance.
That
we
might
can
be,
see here
honestly.
that $94 mark.
That might be
that's
the top.
around where prices topped out in the past. That's this red dashed line. That's what the bulls would want to try to overcome. For support, the 83 level, this green dashed line, that's about our old highs
We are
from back
teetering.
here that we touched after we had that earnings event here to the
89.
downside. So
EMA.
that would be a place to perhaps look for some support. Below that, we've got our moving averages. The first one, our 21-day EMA in yellow,
if
coming in around
this
81.
breaks on GME at 1940 is
So a little bit of
come pretty
breakout
quick.
here happening since the earnings. Get some follow through.
And
is
SPY.
there- what's going on here? We got something?
I
What is
don't
this,
know.
Rick?
It's
We got
that's
something
like
Perhaps.
This RSI divergence on the hourly,
that would
though,
be a classic thing to look for right now. Would be a bull
could be
flag or a bull
negated
pennant
if
here.
price action
We have
holds
a
up.
sharp gap up after a fundamental
Like wait for
change
Easter,
due to
nice.
the earnings. Then we have a
Noise.
brief period of consolidation, and then we'd want to look for another high
Gonna go egg
to
Don's
break
house
out
for
above
Easter.
that high that we established
fitting,
already.
right?
So that could definitely be something that
Easter
could be
egg.
shaping up here. We just got to wait and see. You'd want to, if you were planning on that, perhaps do a buy stop above those highs.
Got it. All right, cool. PVH looking pretty good here.
Number
Last
birds.
one, Sarepta.
It's
Pretty bullish
flushing.
note here. Not a bad
So-
looking chart, Renita. What are they saying fundamentally?
Well, Citi
yeah, if I were to trade it, I would
buy on Sarepta
drop out.
and $179
Wait.
price target.
'Cause this
That
was the
means
level I had
about
for
a
it to hold
28%
234.
move to the upside
So-
from where it's trading now, more like 29%. Now, Citi also added
We'll
this
see.
stock to
Might
its
be going
focus
to
list,
fill-
as well
fill some
as
gaps here.
opened a 90-day catalyst watch
$3
for it.
where it's at now
And
is
a lot
kinda-
of this
might
has
be the
to
next
do
support.
with its investigational gene therapy for Duchenne muscular dystrophy. That's the SRP 9001. Now, the meeting for it is likely going to be happening in late April or
I
May.
might
It's
take a
an
short on the
FDA
yes.
panel. It was not
thinking
initially
that RSI
planned,
divergence in the hourly is
but
gonna play
the
out.
FDA has been favorable on this treatment. So this analyst says
I don't know,
that
is
the
it
change
too
in plans
early?
to actually hold a panel may not be
Did I close my
indicative
video
of the
puts?
FDA actually changing their
did.
views on this treatment. But Citi believes that if this panel is successful, that will, or the panel vote rather, comes out positive, then that'll translate into about a $30 to $40 upside from now on the shares. But the downside would likely be to the high double digits per share if there is a negative vote on this new gene therapy drug for muscular dystrophy.
This is always the fun with these stocks, the give and take.
Do it,
live by the
bad.
sword, die by the sword.
Yep.
For
Gotta
traders.
just watch the SPY. I feel like
You
this
know,
is probably
it
level
went
on SPY
sideways for a
too.
while. then had some pretty good news. Rip, this is a super interesting technical situation, Rick.
Yeah, very unusual chart here. And remember, too, that 179 price target would be right near the all-time highs of 181. So we had some firm support near the 117 mark right here, this green dashed line.
We'll see, it's teeting right on there.
Earnings that was crushed back down to this level here. Trending upward now, though, and breaking through that downward sloping trend line here. RSI above the midline, above 50. Not really showing us much in terms of clues other than that, just kind of following the price action. But zooming in a little bit, we can see here that the 150 level, this red dashed line, looks important because that was our old highs right here. The two trend lines that we have here, and as well as our 21-day EMA, come in around 137 to 136. So look out for those areas to provide some support.
All right, here we go. This could be a big event. It seems like upcoming here for Sarepta, according to the analyst. Really interesting charts, bullish notes. Thanks, Renita, and thank you, Rick. Now, let's take a look at something a little bit more negative. C3AI with the short report now. Caroline Woods has got the story for us at the New York Stock Exchange. Obviously a big winner as of late, Caroline. Someone trying to fade that?
Hey there, Oliver. Well, actually, Carousel Capital released a short report on C3AI early last month.
It can break this level.
They followed up this morning with a tweet
it can break
saying,
here,
we sent a letter to C3AI's auditor Deloitte, the
our
audit committee, and SEC documenting serious accounting
How it played out on birds
issues.
on the hourly was
they say
actually happened,
C3AI's
so.
fictional accounting has no place in the public markets.
Yeah,
so
GME's got a
Deloitte
gap
is
at like
beginning an
17
audit,
something.
Soon
Where we opened,
for this,
where we
based
closed
on these
before earnings.
allegations. But also, the letter, I was taking a look that they sent to
17.50 or so.
Deloitte and the SEC. Carousel highlights multiple concerns.
It might find
alleging
support at
that
1940
C3AI
though.
has utilized highly aggressive accounting measures to
gas kind of
inflate its
bouncing
income
here.
statement metrics in order to meet sell-side analyst estimates for revenue and
Tempt me
certain
not
profit
gas.
metrics. They note highly conspicuous growth in unbilled recevals to
Usually
levels
I heard
they've never
April
seen
and
before
May
in
are
software
bullish.
companies. Also allege opaque, confusing,
gas,
and
I
highly
don't know why.
concerning disclosures for financials related to the company's related party and customer Baker Hughes, efforts to inflate gross profit margins by reclassifying costs of revenue as research and development expenses, classification of significant revenue as subscription revenue, when in actuality they say it's services revenue, and significant turnover in CFOs and the appointment of successfully less qualified CFOs over time. So that's all taking a hit to shares today. As you can see, they're down about 20%.
Coming down, looks like.
But as you
Down
mentioned, this is a company
already.
that has performed incredibly well throughout this over the past year. It's up about 140% in 2023 as so many investors really bet on AI.
92, maybe
and
next
based
level.
on that short report in early March, we saw shares tank. That's when the company basically said that it's a services business that has failed as a software company. Shares
Day
tanked,
this morning
but then
seemed bullish
really
on it, though.
ticked right back
I think
higher in
calls
March.
rally.
So, it'll be interesting to see how this plays out. Haven't seen any response from C3AI yet, but obviously investors are responding to these allegations and selling, with shares down about 20% right now.
Wow. Yeah, that's a pretty negative report. Haven't really heard anything that accusatory since the Hindenburg block.
Them holding up
report.
well.
So, but
BBBY holding that level,
Carousel doesn't pull punches either.
34 cents
so
or so.
By some of the harsh tone that he's taken here, and looking at it in a company that's had a huge run. So if any of those things are true, then you'd think there's quite a bit of air to be let out of this stock. An important update.
EVTL kind of gave it back up, 1.6% up.
Today. Thanks for taking us through it, Caroline
down
Williams,
to
senior markets correspondent, the New York Stock Exchange. Here with me in the
There
studio.
goes MCP, that's good.
Kevin Hanks and Mr. Dan Grant to discuss some of the action here this morning. All right, let's first talk some bonds here, and then we want to talk the stock's reaction to the bonds. This is actually kind of an interesting morning.
Yeah, 64 billion.
Don't want to get too far with it, but this could be like a revelatory morning here if data that came in very soft for jobs, does not show up as a positive for stocks. But to bonds first, Dan, take us through it here. Big rally across the curve for bonds, right?
Right, and that's after huge.
Thanks, guys, for your likes.
Right, the 2-year note specifically went up 100 basis points from the mid-January to the March, went all the way up to 508 basis points, down 153 basis points, all the way down to 355 in yield, 2-year. Unprecedented. We haven't seen those moves. Even in 07, we didn't see those kind of moves.
That was all last month.
Bonds went down with crude prices last week. Crude going up and bond prices went down. Right? So now we're seeing these actual weak economic numbers. Does that mean the Fed's going to be done for the rest of the year? They're pricing in 200 basis point potential, 200 basis points with the cuts between now and the end of the year. So something is amiss. Something's off. The
drop down to 3.8 for the 2-year here. As you mentioned, the spike low at 3.55 from a couple weeks back. I mean, we are really kind of testing real low levels here on not just a year to date, but like 9-10 month basis throughout most of the curve. For the 10-year yield at 3.3, we're making another run at it there too, right? Because
bottom of the curve.
Yeah, because I mean, boy, is this the market telling us here that the economy's in some trouble, Kev, or what?
It's so easy, Oliver. When the data gets weak, bonds rally, the dollar sells off, and you buy stocks, right?
Well, we'll see.
Yeah, not so fast today.
Bad news,
the market did react positively to the JOLTS data, and the other data, the point we got, I think, was construction spending.
Durables.
JOLTS, though, clearly the market moved on that.
Exactly.
We talked about that this morning, how the market really is moving on JOLTS these days.
Yeah, JOLTS, the overall, I love this week in terms of economic data because you get so much employment data throughout the week, all culminating with payrolls at the end of the week. But what's interesting is the market rallied and then stocks failed on that rally on the poor data. So maybe we've got an overall tone change here that people don't want to buy stocks if the market's starting to look weak or the economy is starting to look weak, because that initial reaction isn't looking too great right now.
Particularly the Russell, I mean, getting kind of slapped pretty hard here, down almost 2%.
Yeah.
And we've seen when tech acts as that safety trade, but it's not doing that here this morning. I mean, look, we've had a great 6 months for the NASDAQ run. We've been making higher highs. Today's, unchanged, so it doesn't even show
that's
up
a write-off, and that's
on
a write-up.
the chart. But the fact is that typically, based on the way this market has traded over the last couple of years, you would expect tech to be higher right now.
Well, certainly with lower rates, right? Remember, we've made correlations forever about lower interest rates.
A little green candle here
to positive results in big cap tech.
Yep.
But now, you even had layoffs announced or rumored from Apple this week, Oliver. So there's a lot going on here. A lot of dust to settle in this market, and you're right. One of the big catalysts might be the incredible run this market has had. Going into first quarter earnings that we're about to get in a week here, there could be some serious hesitation going into especially payrolls at the end of the week.
Do we take bonds at face value, though, Dan, and assume that because we're getting this suppression of yields across the curve, that prevents the Fed from fighting inflation, which we just saw still at 5%. I mean, the bond market's been wrong many, many, many times the last year and a half.
And so is the stock market, right? So when the stock market is subject to people's expectation of what the economy is going to do. So now we actually have bad news for the economy, and the stock is not going up. It's actually going down a little bit. So, and the other part is
I have a few of them.
Piling
Small
money
position.
into money market mutual funds.
Those are one of the ones I didn't like.
We're at 5.2 trillion, which is once again, I use this again, unprecedented levels.
That's happening since the bank fiasco, mostly, right?
Correct. Since the beginning of the year, we're at 4.5 trillion. We're at 5.2 trillion now.
UI's down
Wasn't
10%.
That like always? I think this is kind of interesting too, because it actually is a little bit
56.
interest rate related. Because even though
Might still
rates
see
are coming
30
down
cents
here in the
today.
short term
Looking pretty
since
weak.
the bank fiasco, the fact that you're getting all this money moving out of deposits into money market mutual funds. Wasn't that supposed to happen?
Yes.
Like the entirety of the past year and a half? Didn't we talk about the death of the TINA trade? There is no alternative. Like, that's the real implication of that. It just seems like it's like operating on a lag effect of 18 months.
Right, and the advantage of the money markets, they quickly change their yields for you.
And this should be also, I would think, on the margin negative for stocks, because that's now money that's not really like cash to be put into stocks. Is the right way to think about that, right? Because you put it in a money market mutual fund, you're kind of intending to keep it there.
Exactly. There's competition now for yield.
Yeah,
it's not just dividend-paying
really
stocks
slow down the market
that
today.
are attracting investors,
Exactly.
Oliver. There's several choices now, and that leads to movement away from risky assets.
Okay. Good convo, guys. Market trying to figure out how to handle this kind of pins and needles session here. We'll see who wins out, the bulls or the bears in the NASDAQ, but clearly bears in the Russell, as we are showing a little bit of a hesitance to buy up growth. It's really just gold that's working here this morning after Jolts came in light. Thanks, Dan Grant, Kevin Hanks, Trading 360 with Nicole Pedalidi.
Oh, Pedalidi. It is interesting though. You look back on different peaks or bottoms, and it is. I mean, it just happens in at one point. It's like short-term bearish signal turned into a little longer, a little longer, a little longer, and then that ended up just becoming the top. Sometimes it dances around there for a bit, but yeah, it broke that. I actually shorted. I did it. Bad entry just because it's not up here, but yeah, it broke that support. That's all you saw. What do you think of it right now? It's just more unknowns for me when they did the share offering. So yeah, at this point you're dip buying, hoping to time the bottom perfectly, which is yeah. If you're just averaging in, I guess it's no big deal. But I'll probably trade it, but I'm waiting for the momentum to shift. So not trying to time the bottom. There's not much TA, it's bearish. And we're at no supports. So it's all-time lows basically every day since they offered that share offering. As far as all the hype and all that stuff going on, maybe it's good they terminated the deal with Hudson Bay, I don't know. The filing they came out with when they did the share offering was pretty grim. Basically, they need the reverse split to work, or they're going to file for bankruptcy. Need the share offering to go through, or they're going to have to file for bankruptcy. All that to be said, you know, even them filing could be a catalyst for a rip. And you still have the reverse split catalyst, which could cause initially downside, but then maybe a move up. We're watching MCOM is the most recent one that we're watching that split. This was like, I think, kind of unexpected. It was quick though. I don't know how long this was, but yeah, they kind of just came out with it. This was also kind of like a spin-off. So, but yeah, this one so far is sold off. Similar to BBY, since it's split. But I give it like 2-3 weeks from the split to see if you get a big rip. And at this point, it's going to need a big rip even to get back where it was. It was 140%. But we've seen big moves around these reverse splits lately. The SPY broke through that level. 411 might be the top. Very well could be. Getting in somewhere up here, it's gonna. I think we're probably gonna hit the top. Maybe it was today, maybe not. Doesn't make me as bullish for GME. Was that your first purchase on it, or are you averaging in, or? GME.
This is seen now as that confirmation of a headline we did get about a week and a half ago. Walmart, though, has since really avoided some of these mass layoffs that have weighed on several of its e-commerce peers. Think Amazon, that did eliminate about 9,000 jobs recently, in addition to its previously announced 18,000 layoffs. Both of these companies are so enormous, so I do think it's important to put in perspective 2,000 jobs when your company employs millions is a drop in the bucket, but still obviously important to those affected. Walmart shares, though, not really making a major move today, down about 0.5%, still up 4.5% for the year, and still up 26% from their yearly low.
Right, understood. I mean, this just goes on the heels of all the big names that we've heard with layoffs. Okay, then there is Boeing. Downgrade there. Tell us a little bit about that story.
A downgrade from North Coast today to sell on Boeing shares. So pretty brutal downgrade. They reduced to sell from neutral with a $180 price target, which does imply some downside from where we're currently trading at around $210 a share. Now, Boeing shares are lower in reaction today along with the overall market, but this analyst did say they expect changes to commercial aircraft production schedules and foresees a resetting of consensus forecasts that it says looks aggressive. They said after talks with high-level industry contacts, the firm now sees several turbulence blips on the radar screen. With
birds bounced there on $2 or 20 cents rather.
Aerospace bellwether peer group. Last week, we did see some strength actually in Boeing following reports that they will be increasing their 737 MAX production rates above 31 per month very soon. We did also get reports Boeing is making progress on their new 737 MAX model, but this analyst doesn't seem to acknowledge the progress they are making, although Boeing has been a pretty sizable outperformer on the year, only up about 10% this year, but up 86% from their yearly lows. They have seen a string of good news, perhaps why we're seeing this analyst now move to the sidelines, but a pretty brutal sell rating, I will say.
Right, understood. Okay, yeah, it's not too often you get sell ratings. Thank you so much, Jenny Horn. Appreciate it. Let's get some insights in the news shaping the markets. For that, we welcome in Rob Fleming, Senior Market Analyst at Schwab Center for Financial Research. So it's good to see you. Of course, we'll get the monthly jobs report on Friday, but we kick it off with the JOLTS, the job openings, which we got about an hour ago. Your thoughts there?
Yeah, well, good morning, Nicole. Thanks for having me on. Yeah, it was a pretty surprising move, well below expectations. I think it was the lowest level since May of 2021. And it may be a welcome sign in terms of Fed thinking conditions. They're still tight. The ratio of job openings to unemployed is still pretty high, higher than normal levels. But the markets seem to be reacting in terms of what the Fed could do as early as this May meeting coming up. It's interesting to note that according to the CME Fed Watch tool, yesterday was over 50% probability they'll do a 25 basis point and under 50 that they'll pause. And now it's completely reversed, and it's over 50% that they will pause and then under 50% that they will hike rates. So definitely see the markets paying attention, and the JOLTS report is something that Fed Chairman Jerome Powell has noted in his press conferences and commentary. So he's looking at it.
Right. Okay. So this under 10 million for the first time, this February print, for the first time in nearly 2 years. Just say it once more. The Fed in May is most likely to what? Because there were a lot of numbers, and I think people may have gotten lost.
Yeah. It's over 50% that they'll pause, according to the CME Fed Watch tool, and under 50% that they will hike rates.
Right. Okay. So more likely to take a pause. I wonder what drives that. What else do you think might be driving the pause? Is it the banks, the credit crunch?
Yeah, that definitely, anytime you see financial market system seeing a little turbulence, that catches the Fed's eye, because they're closely watching that as well. And any kind of disruption there, that'll definitely maybe cause some action in terms of either waiting to see how it plays out and seeing before they keep tightening, because they've already gone pretty aggressive over the past year or so. So it'll be interesting to see. So far, the Fed, Treasury, FDIC,
look at Lockheed Martin's chart.
The regional banking failures, which seem to calm the markets. But now we're starting to see figures come out big deposit cash outflows into money market mutual funds, and that'll definitely have an impact on lending activity, which lending activity is the lifeblood of the economy. And if there's less lending activity,
big RSI divergence on the weekly.
Not a lot of opportunity for consumer spending, and then also business
super bullish,
which can have an impact.
Yeah. Also, how about the language from Jamie Dimon, where he said that the banking crisis is not over, and there really could be repercussions for years to come?
Yeah, and he also pointed out that this is nowhere near what we saw in the 2008 global financial crisis, but you can definitely see that he's and banks are starting to tighten up credit conditions for loans, so that could have an impact. And you can see that he's a little bit cautious on how far this is going to go, how long it's going to last, and what
GME is not doing it yet.
Yeah. You know what's also interesting over at JP Morgan, the strategist there is saying that stocks moving higher really doesn't make sense. In fact, that we could be retesting lows. What should traders, investors be watching for?
Don't say.
Yeah, I mean, for trading, if you're going stock picking out there and being a pretty active trader, we suggest using maybe definitely limit orders, not market orders. Maybe smaller lots, smaller dollar amounts, and then make sure your risk management is in place. Maybe utilizing stop orders, stop loss orders, and then also focus on quality. We still think that leadership is still going to be there. We think companies that have strong balance sheets, good profits, solid, sustainable profits, and good guidance on how their profits are going to be maintained will definitely be. Most likely be the leaders moving forward. But what's interesting to see in the markets is the breadth. We're a little bit concerned about the breadth of the market. We've had, I think, the 10 largest S&P 500 stocks account for 90% of what we saw in Q1, those solid gains there. So we are a little bit concerned that as we saw in 2022, after 2021, we saw that larger companies lead the way. 2022 came around and they've kind of faded and the markets pulled back. So we're kind of worried about the sustainability of the rally if we don't get better breadth underneath the surface.
Yeah. You know what else is interesting? The U.S. dollar, right? So as the dollar pulls back to the lowest levels, basically since February, people are looking to gold as the safe haven. Now it continues to tick higher.
So
I think it's at
got a level drawn here. I'll just flush through there.
Troy ounce, 39.
408.92. Wow, SPY is really selling off.
$80 the barrel on the OPEC cuts.
Down 0.5% now.
What do you think about this relationship? What do we see going forward, dollar and commodities?
Yeah, I mean, you can see the U.S. dollar pulling back
like
as with short-term Treasury yields, just given the change in Fed expectations there. So, and then also the inflows into the money market mutual funds also suggests that there's a chase for yield and safety there, and so that's and the gold prices rally there. That's usually a safe haven play. So it's not too surprising to see that those dynamics play out right now.
Right, understood. All right, good to see you, Rob Fleming. Thank you so much.
So
the Schwab Center for
RSI divergence in the hourly is kind of playing out right now.
Come right here on Trading 360. We'll talk all about EVs following the latest delivery numbers from Tesla and Rivian.
I think 408.44 is still coming. Haven't had a let up though on the SPY. I've won a green candle in 20 minutes. green candle forming on SPY there. Kind of right at this level from yesterday. AMC down 22%, just under $4. Alright, SPY's coming down more there. Getty still up 6%. Microvast, wait, that was me. Me again. EVTL, green candle, some volume.
Done today, I think we're actually going to see probably a rejection of lower price inside the S&P, because right now the volume is really weak.
Flushing down
It's
there.
early in the day, but that's how it's set up. And you know, it's
408.44 is that next level.
There's like a good banking crisis, right, to send the market higher. So it's pretty wild in general.
Yeah, I mean, and really, we're seeing a lot of things pulling back. I saw business spending, shipments of core capital goods, the factory orders. You know, there's a lot of things that are starting to pull back a little bit. Let's get to your names here. First one is Dollar Tree. It's around $148 here today. What are you thinking?
So you can buy it here.
Okay.
You know, you put a stop, you know, somewhere like 145, and I'm looking for this to go to the 157. The 157 is a swing point that's hanging out there from about a month and a half ago. It has good volume at that level. You know, so this is basically technically it's a decent trade setup. Fundamentally, you know, this inflation is not going to stop. And, you know, people are looking to save money. So I suspect they're going to keep going, and, you know, they're going to go to the stores that have the best prices. And in this particular case, I see that 157, you know, is game to get hit. And that's what I'm looking for. Particularly, you can see the volume that came in yesterday. It was huge volume. You know, there's buyers in this equity.
Yeah. Okay. Rick Ducat is with us, expert here on the charts. Glad you're here to take a look at Dollar Tree today. Rick, your thoughts at this chart?
Well, it's looking
GME
rather
holding up with this
promising for the
5
bulls
flush.
this morning here. We're up about 10%
How long does
since
that
we
last?
bottomed out here near the 135 level, this green dashed line. And this looked like an important price level because we had a triple bottom back here, and that's also where price topped out here.
Did we just lose internet out?
Before we had the gap there. But we, in the past couple weeks here, we moved above all three of our moving averages that we followed. Yellow 21-day, orange 63-day, purple 252-day. We also broke above our volume profile point of control, and yesterday we broke above this trend line, this downward sloping trend line here.
It's
What fly in the ointment potentially is that we did not break above this 149 level, this red dashed line here. That's about where we topped out a few times, our best closes. Not necessarily the intraday highs here, but we're following the high closes there. So the 149 level will be an important important place to watch heading into the close.
I was early on the entry.
Looking at RSI, we're tilted toward the bullish side of the camp here, making
411
new
though.
highs above our previous highs, which is
that might be it.
A bit of bullish divergence there here because price has not made new closing highs yet, but we are surpassing our previous highs on the RSI. So that could be a positive sign as well that some steam is building up. Looking at support and resistance, 149 to the
Fidelity
upside
broken?
is
Trader Pro?
an important one. That's the red
I'm not
dashed
able to
line I
log into
mentioned
it.
earlier. We got to break above there.
Keeps
And I
linking me
see
to the
what Tom's
website
saying about the 157 level. That was another
just can't log
logical
in.
level to look for some resistance here. If things do start to break down, 146 would be our trend line. And then just below that, we've got our purple 252-day EMA near the 145 level, Nicole.
Yeah, and I like how you talked about how it's broken out above a lot of the trend lines, Tom. I'm sure that caught your attention for your trade where you think it is moving higher to this 157 level, say.
Particularly, Nicole, you know, you can see, I mean, with the S&P's down 20, you know, at least we're still flat. So that's showing there's some strength in there. You know, when you have the S&P down like this, you know, the bottom line, if you get anything that's positive, that's pretty good. So, you know, we'll see where it shakes out. But as Rick said, that 149 is a crucial level. I mean, the last time it didn't hold that level. So we'll see how that shakes out when it gets up to that level.
Right now, 6 months, it's about 5%.
Wick down below that support.
About the same amount. Okay, so let's get to your next one. Lennar here, it's around $103. What are you thinking?
So this one is kind of a deviant trade, meaning in the aspect that, you know, you have rates higher, you know,
eating ice cream?
It's a home builder.
What time is it there?
Bottom line, though, is that, you know, you're
Morning
at
ice cream guy?
103.61. I'm looking for this to get to the 109 level. You can put a stop 10, you know, basically under the strength from a couple days ago, the 102. Now, what you have here is that, you know, we have high volume, low high at 109. And that's what I'm looking for. And what's intriguing, and this is what I see in the market when you asked me the question just a little bit earlier. I think rates have peaked. And you can see, so what's happening out here this morning is that you have the dollar going after its lows. You have the bond and note market going after its highs. You know, so if that's the case, you know, you're going to see these home builders come back because the bottom line is that we know that there's a small supply versus the demand. But we also know that mortgage rates are high. But if you start pulling back, you know, each 0.5% pulling back makes real estate go up dramatically. Because my take is that what's going to happen here is that inflation is going to back down, but not like people think it's going to back down. And so the Fed's in a situation that, hey, you know, my take is that they're done raising rates unless they want to implode every bank out there, you know, because they all get bad trades on. So, you know.
So I guess they did the last rate hike to save face. Is that what
it might be
Tom?
temporary bottom at least.
Yes, they had to do that last rate hike for sure. Because if they didn't, all of us would be saying, okay, this is worse than it is.
I'm not closing my shorts.
The amazing part is this, Nicole, when you look at it. So this is really about our treasury market because the fact of the matter is banks can hold treasuries on notes, right, at full value, but yet, you know, now the Fed will lend on full value. So something that's worth 80 cents, they'll lend as $1, which makes 0 cents. But the fact of the matter, that's how it is. And they know full well, if you go up, all they're going to do is dent the relationship of the balance sheet again. And my take is that they're not going to do that. that's like, oh, really? Because the public's catching on to how this works, you know, and that's where it gets shaky. Once the public gets on to how it's working, you and I, Rick, we're in the business. We understand it. I mean, that's only 10% or 5% of the world, realistically, that understand how that shifts, you know. We couldn't get away with those trades. So I see Lennar going higher.
Okay, and look, it's the season, right, I guess. Rick, your thoughts on this chart of Lennar, which had a recent high of 109, but has been trending higher since the recent lows, I guess I could say.
Yeah, kind of a zigzag price action here. We had a longer-term uptrend, a shorter-term downtrend after we hit those yearly highs that stabilized right around the $94 mark, which is this green dashed line here. That represents some old highs that we saw here, and that's about where we bottomed out here as well. So then we're back in a short-term uptrend here that kind of interestingly is parallel to our old uptrend. It's roughly the same slope, kind of going the same trajectory here. So that's was kind of a curious thing here. You can often duplicate trend lines and extrapolate them toward other highs or lows, and it tends to work sometimes as well. Not every time, not a guarantee, but an interesting thing to note here. The 104 level is standing out today. That's about where we saw our previous highs from this little peak here, and that's about where price was seeing some topping out action here around this congestion area. We have a bit of a node forming just below that as well, around the 103 area. So there is some conviction in this area. Traders are willing to make some trades and perhaps buy into this rally here. So we're seeing perhaps a bit of price acceptance. Looking at the RSI, kind of not really showing us a ton here. Tilted bullish, but it did not make new highs with price. So a bit of a warning sign there, but we're still trending upward. We're still above our 3 moving averages that we follow. Moving averages themselves still sloping upwards. So the trend is still in our favor for what Tom was suggesting if you're into making a trade out based on that. So zooming in a little bit to look at our support and resistance levels, we can see, as I said, we're right on the nose with our 104 level today, which is roughly in confluence with our trend line. So this could be a crucial area to hold heading into the close. If we do start to break down again, the 102 level, that's our yellow 21-day EMA. That could be another point to look for some support.
SPY still hanging out here at this support from yesterday.
108, 109. What's a dollar between friends, Tom? I said 108 based on the close, but that could be an area where we start to see some resistance.
I did close one
as
of my
well.
4
So 102 to the downside, 108, 109 to the upside, Nicole.
We start to bounce, I'll close
thank
more.
You for that, Rick. Final thoughts on this one, Tom, on Lennar?
Yeah, this one, it actually blows my mind that I'm looking at this one and trading it, because it's like everything seems, on the opposite of what it should be. But I like the setup. They're saying fundamentally they're going to take in about another 500 million. So I can see it. I mean, they have a big presence in Florida, and, it's down here. I mean, you put a house up, you still put a house up, it's gone in 5 days. So, it's happening. It's still happening, and they're buying down mortgages right now. So they have both going for them, you know what I mean? So.
Yeah. So Illinois Tool Works is right around your stop here, because you said the stop is 239.04. It's in the 239 range
Big short
today.
Tuesday.
But you really think this can go above 250, Tom? Tell us about why you think that move is possible.
I do, and they're hitting this out here today. Well, I mean, in the last 5 days, we just went from 227 up to the 245, but there's no doubt it's getting hit. So at this particular point, I'd actually wait for this thing to get down to like 237 or something, okay? I had it higher. I would have bought it this morning, but because of the way this is acting, I mean, it's light volume, but what you have here also, this actually broke topside with volume, which I love, okay? What it had is that you had a sideways move that was going for a couple months, October, November, December. It broke topside, had the volume, pulled back with light volume, and this is saying that 253 is game. Now, this is in a very unique business. Most people don't even know the stock, okay? This is a testing stock. Testing meaning whether the windows in your car, any type of manufacturing that needs testing, that's their big business, and it's a subscription-based business. And so what ends up happening, Nicole, is that let's say you have a big government contract. You can't even get paid until one of these machines are out there saying, okay, what you are going to deliver is tested out and it's cool. So it's a very cool business in the context of, month after month after month, year after year, they got to keep paying, to say, okay, my manufacturing plant is still up to giving you a product that we think that we're getting. Right. So it's a unique company. So.
Okay. All right. You know what? We'll be believers with you, maybe. Let's see. Let's take a look at Rick's chart.
This will be a tough one.
Well, we're fading a little bit today here. We're down over, let's see, 2%, 2.2% or so on the day here. But what's really rather concerning, I would say, is this 240 level, this blue dashed line here. We're starting to break below that point, and this is about where we topped out a couple times here. So that could be a worrying sign here for bullish traders. But overall, I mean, not a ton of technical damage. We're still within this upward sloping channel here that we had start near those earnings back in October. More recently, though, we can see that price made its way above our two shorter-term moving averages, our yellow 21-day, orange 63-day exponential moving averages here. We moved out of this volume node area right around the 230 level. So that was an area that we were seeing some heavy trading, some price acceptance here. But moving beyond that point, we've also been out of the value area for quite a while here. The value area is denoted by these two thick yellow lines. It's where 70% of the trading has taken place between these levels here. So a move beyond not only the value area, but also beyond the node that formed out of the value area is kind of interesting here. So look for another node to form to suggest that traders are willing to step in and that they like these levels for where this stock is trading. RSI was looking a lot stronger when today opened up here. We're falling off noticeably today, but still mostly just following price action and also still tilted toward the bullish side of momentum here. So once again, you know, maybe a little concerning, but not alarm bells just yet here.
Yeah, I knew that news was coming out.
Still trending upward as well. They're still diverging apart from each other, which
I didn't know when it was coming out.
Could have some
and I was tired of waiting.
Here, and
I wanted to do them down here.
The upward direction here.
Then have that nice bull flag set up, so I'll just go for it. Literally, I opened up yesterday.
Slope, especially the shortest term one, that would be the canary in the coal mine, so to speak, about a change in trend.
They
so
don't
to
seem to go
zoom in a little
bankrupt.
bit and look at our support and resistance here. The 240 level, like I said, that's the area to watch heading into the close. That's what we'd want to close above to make sure that we this rally kind of remains intact here. If we do break lower, 236 would be the point of
and
our
if
21-day
GME gets a rally too, AMC
that
will
could be a
probably
point to look for some potential support.
It's kind of
and then
crazy.
you know, the 251 level up
EVTL,
here, this
5.5, there you go.
that was about where we had our best close, just below that point. That would be where many traders would likely start looking for some potential resistance, anywhere from 251 to 253 or so.
All right, thank you for that, Rick Ducat. Good job there on those charts. Final thoughts, Tom O'Brien?
I like how he's using those market profiles, Rick. And he calls them value areas, but the market profiles are where it's at, and it's right. It's coming down into one of them right now, and this is coming back with such light volume. I suspect it's going to hold because I suspect even though the S&P is down a couple $20. Next couple of days is going to be sideways to positive. Next week, I think we'll get a whole different story. Next week, I think this market wants to pull back a bit.
3 times.
This week, I think you're going to get a sideways to higher market.
Here goes bar trading.
Okay, good. I'm glad you noted that. So
Phase
we can be
11%.
ready for next week. Tom O'Brien, thank you, TFNN, and our own
BBBY
Rick
still above 30 cents, so
we
got time.
Today. Appreciate it. Coming up next, a spotlight on EVs.
Mine is bullish for the company.
Reporting all those deliveries.
I said last time we diluted, our stock rallied a bunch, so we'll do it again.
Stocks after we did see Tesla sell off 6% yesterday.
That tweet was hilarious.
Coming up next.
That's literally what he said. Guys, listen. It's good. We ripped last time we diluted. Can't get fooled again. SPY's consolidating down here. No bounces yet. It is respecting the support so far though. This little double top was a great entry. It wasn't as noticeable because I was using extended hours in the morning. Oh, I didn't know you were actually quoting someone. I don't remember that. can't get fooled again. It's off to Egger House. Nailed it. Flyover. I might be moving up here, maybe just more consolidating down here. OST came out of nowhere. 10% on that guy. This is a financial plan. Avocado's house. OST 11%. Yeah, 5.5 still. GME a little pop there. It was getting pretty testy down at that support. Drops low though, 22.4. High wicking down. BBY just melting down, almost 11%. 34.25. AMC down 22. Still hasn't hit pre-market lows though. That was quite a bit lower, 36.40. That 39. View ops at 40 or 4.
Utilization. This is just a car company that is engaging in margin slashing price cuts. We believe they're going to have to cut prices again imminently, and we think that's going to result in significantly lower margins. It's just a car company that's having to compete, and given what we think the earnings are going to be this year, it's trading at 100 times forward earnings when the industry trades at 6 times. Look, we think there's significant downside.
Where's your price target
is roughly $24.33 end of this year. We think it gets there. We think when they report Q1 earnings, I think a lot of analysts are going to have to take a good long look in the mirror and realize 15%. This isn't a margin-leading company. They were ranked dead last in FSD. They're buying batteries from Panasonic. The 4680 battery promises they made at Battery Day. We now know a bunch of it's true.
Not very bullish looking.
FSD, again, they ranked dead last, and I think if you look at the videos of it, I don't know how else to say it. It looks like it's just not meeting expectations. And, you know, they're getting their lunch taken in both China and the U.S. as well as Europe by VW. China, BYD, U.S. Ford,
tell me your short position on Tesla
China,
without telling me.
in Europe. So they're just facing a lot of problems.
You know, Gordon, I almost wish you were a little more
open.
I don't want to say in the game because you're very much in the game. A little closer to current levels. Like, had you said this is a $100 stock, you know, it did dip down to $101 at one point, but then everybody bought it. It's closer to $200. To say $25, I mean, just feels so far away, and it hasn't been anywhere near. We've had you on the show many, many times. I love chatting with you. I'm waiting to see. I love when my guests are right. I don't want people to lose money, but I do love when people come up with smart theses and they are actually right. But I haven't seen you be right about this big sell-off.
That's weird. You can't bring this to the planet. That makes sense, I guess.
And the Gigafactory in Texas both came on board in
maybe a quarter. I don't know. 30 cents would be next.
Supposedly are going to continue to help.
You know, don't get too excited, Ace.
It's not just a car company. That in fact, it's a battery company, and you know, all kinds of other energy and all that. I don't know. Let's move on. In the meantime, what about a name like Rivian? Now, so when Tesla's producing, let's say 1.8 million this year, you have Rivian that's shooting for 50,000. Tell me about do you like Rivian?
When you think about a stock like Rivian, it's valued at roughly 28%, looking at market cap, of Honda. Rivian, just like Tesla, is producing more cars than they're selling. They're not even, and by the way, they produce less than 10,000 cars. Their guidance is 50,000 for this year. They sold around 8,000 cars. So they're producing less than they're selling, yet they're valued at 28% the value of Honda. Honda sells 2.2 million cars per year.
He's not wrong about Rivian.
So you're going to have margin degradation
Tesla,
at Rivian as
25.
well. We think Tesla and Rivian are going to have to engage in price cuts. And keep in mind, Tesla had a horrendous quarter with respect to the Model S and the X, the high-end luxury.
Talking about Tesla again.
That's Rivian's core constituency of customers. So we think they're going to have even bigger issues than Tesla. We think the valuation is aggressive. You know, they're valued at nearly a third of Honda, despite the fact that Honda sells 2.2 million cars a year profitably. They sell, you know, they're targeting 50,000 cars a year unprofitably.
What's your price target on Rivian?
Jamie,
by the way,
back to view up there, not bad.
Had some strong numbers too. What's your price target on Rivian, which right now is at $15? And by the way, Amazon has a fleet of Rivians. I know we have the Hertz deal with Tesla, but you know, I'll give you something on this. So, and there's a lot of people who really love the Rivian pickup truck.
I like consolidating here, see if it breaks or if it bounces to the upside.
We don't have a price over the Rivian. We don't officially cover it. We do have a model, but I'll just say that I think that it's significantly lower.
10 seconds. Do you have one you love and you think is going higher in the world of EVs?
We've always said we like BYD. We agree with Warren Buffett, even though he sold a lot of shares recently. And when you say one quick thing, when you say Tesla's a battery company, that's just not true. They're not a battery company. They're buying batteries from Panasonic, CATL, 4680.
Yeah, it's got that big divergence there. It does look bullish actually.
Than the existing
but fundamentally, no, I think it's way overvalued, like that guy said.
So we think
yeah,
Tesla
actually,
has issues, and with respect to
very
Rivian
nice looking
being
chart.
valued at a third the value of Honda, I just think that's a bit rich.
I like that.
Okay.
Al,
I haven't
I'm
seen
with
the
you. I
batteries
agree.
from Tesla myself, so
I might take a position
I
even.
don't disagree with you. I mean, that's supposedly what's happening, I guess, in the years ahead. Gordon, nice to see you as always. Thanks for being on the show. Gordon Johnson, GLJ Research. Coming up next, Kevin Green standing by. He's going to take a look at service.
Don, I almost bought into that thing.
He'll break down that report and show us a.
I mean, it's a similar play to Bed Bath, really. Maybe not quite as far down the road. Yeah, this chart looks bullish, much as I think Rivian's stupid. People get Bobby shares, same as. Yeah, they totally do. Do everything they can. But our data on it's very limited, right? No matter what stock you're looking at. Yeah, look at the borrow rate. They look at how many shares available. So 78% is the borrow fee on it right now. 3.7 million available. The borrow fee's been coming down since February. Let's see, January, February, March 21st. It was at 115% and kind of holding flat there. Been coming down since then. 125%, now it's at 80%. Buy is bouncing up here. Still have one short I want to hold and average into it maybe up here. Did buy that thing. I like that price target, Al. I like everything you said about that. I think you nailed that one. How much time should we give it to do it? Give it till the May monthlies. $14.23. I like it. Wait, what? I don't have a 14 strike. What is this? There's only 3 options expirations in May? Oh, we're talking May 12th. Oh. So options aren't actually that liquid, I'm surprised. I'll just do the 12.5 and 22.5. I like that. I like that. Kind of expensive with that wide of a spread, but yeah. Break even on this place 15.57. So I was literally there yesterday or today, this morning. So not too risky. says break even's 40% chance, max loss is 27% chance, max profit's 4.5. Because my short leg is so far out. Bring that in a bit. Get it more secure. Yeah, don't need to be 22.5. It's fine if it gets the money. A little safer. My futures trading messed up my buying power. Let's see if I can sell something. They're looking at 15. No, it's at 12, 12.5. Save that order. I can clear up some capital. Good entry. I mean, depends on how long your plan. You're day trading it, scalping it, holding it for a week, a month. I'm looking to get in a position right now. Phase up 15%. Getty 10, EVTL 7.5. You can do it. I want that Rivian play. Watch it rolling. No, let's check it out. It was looking bullish last time we saw it. No, I don't like it anymore. No, yeah, I remember actually yesterday when we saw it. Just couldn't get any green candles, all gaps. MACD is bullish, but I don't remember what I even liked on it. Maybe I didn't like it. Maybe just you liked it. All V companies are overvalued 100%. Yeah, they're awful. They're all awful. You got to move up to VWAP there. Eggs are expensive here right now. Yep, don't go egg and houses. We'll probably just come out and thank you. Bring all the eggs in and make some scrambled eggs. We just bounced up to VWAP. Raised earnings by 708%. Jeez. Head and shoulders on EVTL? Yeah, a little bit, maybe, yeah. It's hourly though. I'm still liking the daily. It's liking this long term, like that it held that 187. Can't get into this trade. IV's actually pretty low on Rivian, huh? Crazy. Just do it. You can do that. I'll just do cash grid put on the theta account. It actually has inverted head and shoulders there, or no, RSI divergence on the hourly. I like it on the daily, but might come down a little bit more. Oh, it's not even on my watch list. Where's an over is a pretty good entry point. Yeah, I had that gap. It almost filled. So RSI divergence is kind of this move down I think we're getting right now, but that was a big wick down there. Hard to know if the run's over or not. Not really showing that it's starting again. That's basically what I'd be waiting for, is volume and, you know, good price action. Unless you're just trying to dip by and hope it's still going, because it's rejected that breakout kind of twice now, that 30 cents. But it is still holding up. It's not like it's come back down to where it started, so it seems like there's dip buyers. This 22 cent looks like a pretty good level. Yeah, I'll just be patient on it probably. Wait for the momentum to start going and jump on it. Because when this thing wakes up, I mean, it gets pretty crazy. Or you could dip by it here and, yeah, I don't know. 30 cents, so I'd be looking for potential exit, at least some of it. Because it might, if it does rally again, it might just reject there. But if it breaks there, then yeah, you might have a lot more upside. No birds entry point. I love all the attention birds got, even though I closed my position. Yeah, Rivian, I feel like intraday it's bouncing here to VWAP, but it might come down a little more before it keeps going. Maybe it's like 14 level, because that RSI divergence there. I don't know. SPY moving down. Morning, Jonathan. Almost afternoon, man. 3 minutes. You barely caught it. Oh, if we break through this level, we'll probably get back into some shorts. Looking to add back on a bounce, but we're just consolidating at the lows here. GME held very strong through this drop on SPY. That's good to see. And it's still holding above that level. Broke through that kind of descending line there, but bounced on that 22 again. Wish kind of bouncing a little bit. opened up a short on Corsair. Maybe early on that. I'm just thinking like a triple top. Pretty clear range. If it breaks here though, it'd be good. Did have this kind of inverted head and shoulders down here. Yeah, this thing actually might be about to break out to the upside. SPY coming down. Did wick down to 408.21 earlier. Whoa. Whoa, big bounce. Got the buyers. Not big, but volatile.
Good afternoon, traders, and welcome to Fast Market. I'm Tom White, and we've got a great lineup for you today, including discussions and strategies in Boeing, which is falling today after a downgrade, and ServiceNow, which was upgraded and is now up 23% so far this year. And like Foley will break down consumer sentiment data on Etsy, which is up about 2% on the session on an upgrade.
Carvana, 4.4.
Now 2.5 hours into the trading day, stocks are moving lower.
I don't know. Do you guys know what's going on with Carvana? Is it
labor data bolstering speculation the Federal Reserve is
they going bankrupt or
the
not?
end of its rate hiking campaign.
Is there any update on what's going on with them?
Lows and yields
I kind of want to do cash
falling,
trade puts on
but
it, but
neither have lent support to equities today.
I'm nervous.
Now let's take a look at the four
The
major
options are
indices,
still
which are
pretty
just
high.
near session lows as we speak. The S&P
come down quite a
500,
bit.
the benchmark, down nearly 0.7%.
And everything.
Dow Jones Industrial
I've got
Average
everything's
off
come down.
250 points.
Market's not very
the
volatile
NASDAQ
anymore.
100 down 0.25%. And the Russell 2000
Carvana
the
puts for
small
next week.
caps leading to the downside.
That was another
down
thing that just
over
kind of double
2%
top
on the
up here.
session, led by the financials selling off
Or we're just
today.
doing a cup and handle.
To
Really.
help me break down this market action, let's bring in my co-host Kevin Hinks. Kevin, so
What's
we
your
talked
thinking? Why
about
are you
this
doing puts for
yesterday. I
next week?
said, what if that number's below 10 million as far as the JOLTS report?
Is this double top?
I was a little bit optimistic if it fell below that level. It hasn't been below that level in over a year.
Yeah. Even though there have been
Got
some
an inverted head and
expectations, it was a
shoulders here.
nice surprise on the downside.
Right.
And the market
Maybe a cup and handle
initially,
here.
the knee-jerk reaction was higher.
Yeah,
in the
just
market.
slightly higher, about a
And
quarter
then
of a percent.
And then
Bird
it
at
failed.
213.
Yeah, and you've got yields down.
Nice.
You've got
Yeah,
the
I mean,
dollar
insiders
down.
have been
There's
buying.
no support here for equities.
Right.
This
So
is kind of
if you're willing to hold it, like it's probably a good buy here. Insiders are buying all around this level.
Wants to actually see worsening labor data.
The narrative lately was we want weaker data.
Yeah, 213.
And
Just
you're
below
getting
VWAP.
the reaction in bonds.
Yeah.
Right? You're getting the reaction in the U.S. dollar, but you're not getting the reaction in stocks. That's the surprise.
Yeah, she's kinda
That's
looking at
not-
that
I don't know if
double
it's a
top.
surprise, but the reaction was not what people thought.
Not what I thought.
Everyone
Yeah, I
thought
mean,
the
there's
market would
resistance there. This
rally
does look like a
based
cup
on
and handle,
that.
though.
And some of the metrics,
And this
some of
is
the fundamentals,
like an
like
inverted
the
head and
U.S.
shoulders
dollar,
here, and even
like
kind of a bigger
yields,
one here and here.
would point to firming stocks, yet you're not getting it, Tom.
Yeah, you're not,
It's
definitely.
Not, it's not a great read. It's really just in that
one
channel.
of the reasons
Looking
maybe
for a break of that
a little bit
10,
of
and then
stress
you're-
on the
you're good
markets
to go up.
today. J.P. Morgan CEO Jamie Dimon came
could
out
see
with
puts if this rejects again.
his annual shareholder
10-17
letter.
or so.
Maybe it was a book. I don't know. It's
43 pages.
That sounds like
That's
more like
not
a
a
book.
letter.
But the thing that caught my eye on reading through some of the
on GME?
commentary in
I just
there
got one more. I
was the
keep
fact that
scaling
the
into
word
it.
crisis was used over and over again.
So-
Let's bring in Caroline Wood, senior markets correspondent here on the network, to help
yeah, I
us
was gonna do
break down
Rivian.
maybe the reaction to this.
Cash trade
Caroline,
puts.
because it didn't have a lot
I'll
of
wait, though. This might
in-depth,
settle down a little more.
probably content in it. But I mentioned crisis.
But I do
was
like the
mentioned
Rivian
across
chart
the
that is
board
bullish
in this
looking on the
note.
daily.
It certainly was. Thank
And I even
goodness for
have the
that Control F
approval of the
function where
old
you
wise
can
owl.
keyword search for so many of the key things that I was
Getty,
looking for.
17%
words
now.
like
Wow,
crisis
breaking
and
out to the upside.
recession and economic storm clouds, things like that. But I think the key takeaway was really Jamie Dimon, of course, the CEO of JP
Thank
Morgan,
you for your
talking about
membership.
the stress that we've been seeing
Gift.
in the banking system and the fact that he did
Ace.
refer to it as a crisis, and not just a crisis, but a crisis,
Appreciate it, man.
that's
Did it
not
come up? Did it
over
come up?
yet. This was the key line that stood out to me. The current crisis is not over yet, and even when
One
it
of you
is
great can
behind
smell it.
us, there will be
Very end, there's a free
repercussions
membership
from it
there.
for
You want
years
it.
to come. Diamond said the
sniff it
failures
out,
of
click on the green
SVB
box.
and Credit Suisse have significantly
there might be a setting where I can
changed the
change
market's
so it
expectations. The market's odds
automatically
of a recession
assigns.
have
That doesn't make any
increased.
sense.
And while he did
I've seen it
stress
automatically
this is
assigned
nothing
before.
like 2008, he says it is not clear when this current crisis will end. Of course, JP Morgan is the largest bank here in the U.S. There was talk about how the bigger banks like JP Morgan could benefit as some of the other regional banks were under stress, as we saw some actually fail. Diamond made it clear that bank failures are not good for any banks, even if some of the larger banks were beneficiaries of some of the inflows. He says any crisis that damages Americans' trust in their banks damages all banks. While it's true that the bank crisis benefited larger banks due to the inflow of deposits they received from smaller institutions, the notion that this meltdown was good for them in any way is absurd. He said there will likely be regulatory changes following these events, but he did warn that he doesn't think those should be knee-jerk, whack-a-mole, or politically motivated responses. He said that often result in achieving the opposite of what they're intended to do. He instead called for more forward-looking regulation. Also highlighted some common goals that they should have. The first actually being to strengthen regional mid-sized community banks, which he calls essential to the American economic system.
Grab some more shorts.
Another one
Doesn't
of
seem like a
those
false
was also
breakout at
the
this
fact
point.
that he
It's
thinks
kind of hanging
banks
out
need
below
to still
that
be
support level.
investable, be attractive
407.71 I'd
investments.
say is the
He said,
next
in the interest of the financial
next
system,
spot
it's
to
in the best interest of the
clear
financial
some
system
off
that
of there,
banks not become
take some
uninvestable
profits.
because of uncertainty around regulations that affect
Yeah, let me
capital,
look.
profitability,
Jeez.
and long-term
Probably
investing.
wait.
So lots of interesting notes here. He did say that there was no economic hurricane coming like we've heard from in the past, but he did say the current economy is pretty good, but there's storm clouds ahead. No surprise that we're seeing shares of really all the big banks lower today, and we're seeing regional banks quite a bit lower today as well. First Republic's down about 6%, KeyCorp down about 6%, M&T off about 2%, and then JP Morgan, Citi, Morgan Stanley, Goldman Sachs, Bank of America all down 1.5 to over 2%. As you can see, Wells Fargo off about 3% right now. So definitely think the fact that he's referring to it as a crisis, but also a crisis that isn't over yet, weighing on shares of these financial firms.
Yeah, Caroline, even though he admitted that they were the beneficiary, a lot of the funds moving from smaller banks to big, this certainly wasn't a victory lap on his part. And I don't think he made any news today. I think he just reiterated what, frankly, we've been talking about for the last several weeks and months, which is, here's some of the talking points that stuck out to me. He warned about higher fiscal spending, higher debt to GDP, higher spend in general, including climate. They're touching that base. Higher energy costs. He said savings are moving from a glut of savings to scarce capital. And he talked about higher inflation and higher interest rates going forward. So he didn't talk down inflation. He does tend to sometimes talk his book, which means he likes interest rates higher in general, right? Because his bank does better with higher interest rates. But this was 43 pages. He touched on a lot of bases, Caroline.
He certainly did, and one thing that you did point out is just really the strength of the consumer. It's a positive right now, but as you made reference to, some of those storm clouds ahead obviously had to do with abnormal QT and fiscal spending, but also the fact that the consumer, he's saying, excess savings close to zero by year end. So it's really setting the stage for this economic downturn that we've been really waiting for quite some time. Obviously, the jobs data will give us an indication if we're seeing it hit the labor market at all. But, he definitely talked about climate spending, also talked about AI, and said that JP Morgan has already been using it for hundreds of cases. But to be careful, I cut and pasted this. We take the responsible use of AI very seriously and have an interdisciplinary team of ethicists helping us prevent unintended misuse, anticipate regulation, and promote trust with our clients, customers, and communities.
So that Aloha where she's sneezing.
He really kind of touched on everything across the spectrum.
Flush through that level, but I think it'll probably just wick.
Referring to this as a banking crisis, and also just kind of predicting that these economic storm clouds, many of which you mentioned, Kev, that we're going to have to kind of buckle up for.
Yeah, and
ethicists.
Yeah,
say that 10 times fast.
No, I can't say it once fast. But the fallout
big
for
flush
a potential
there, though,
recession.
down 0.8%.
I think he highlighted that also in the commentary. All right, great stuff as always. That's Caroline Woods, senior markets correspondent here on the network, breaking down the book that Jamie Dimon sent out today for his annual shareholders note. But Kev, we talked about the JOLTS a little bit. Yeah. They revised last month's down from about 10.8 million down to about 10.5 million, but we still had a decrease of 671,000. Yeah. 1.67 job openings for every person looking for a job.
Still a high number.
That's the lowest that we've seen in over a year.
Right.
And it's still a high number because remember, JOLTS typically or historically before the pandemic started, they were like 6-7 million job openings. So we're still in a tight labor market at this point.
Yeah, right around 10 million is still a big number, right? It came in 9.9, so it's not like it's not a big number. But Tom, the question is, are these companies pulling open jobs? Are jobs getting filled? What is it? I'd like to have a little more data on that because it could just be that open jobs are getting pulled from the market. Like if you're laying off, if you're one of these big tech companies and you're laying off, you should probably pull your open jobs. Yeah. Right? It's kind of a common sense look at this.
We talked about that yesterday. That like a lot of these companies hadn't pulled their jobs from listings because they can leave them up there forever. They don't have to hire anybody on those job listings.
But you can make the case like in Facebook, they're still hiring to some parts of the company and laying off in others. Yeah. So there's that argument as well. It's a the JOLTS is a fascinating number that's really gained in popularity during the pandemic and post, but. We're going to get ADP, we're going to get jobless claims, we're going to get payrolls, and jobless claims are still under 200,000. The 4-week average is still under 200,000. So still a lot, still a strong labor market. But this is, if you're looking for, Jerome Powell probably liked this number.
Yeah, and a lot of these data points are lagging. On Thursday, we'll get jobless claims, which is a little bit more forward-looking. That ticked up last week, but still under 200K. So the jobs market will continue to be in focus here, Kev. But one of the notes I looked at today was from Apollo. They put out a note about the S&P 500 gains since the beginning of the year, driven by about 20 stocks. The market cap of the remaining 480 stocks in the S&P 500 has basically not gone up at all. So we're still getting led by those major tech companies.
BBY, there's going to be a rally. I mean, rally doesn't matter though.
That's not
if
like a healthy
so low that doesn't matter anymore.
But we've had some nice gains so far the first 3 months of the year.
This market.
That's an easy answer to say, yeah, it's going to be a rally. Just how low does it go first, and then how high does that rally go?
Earnings, and I'm sure there's some hesitation going into that. We're a week away now.
Before it was like, when we were at 80 cents, it was like, it's going to, I thought any kind of rally quickly fill that gap at $1.
The yield curve
is an easy first step, and then,
IPOs, mergers
and
acquisitions
$1.50 would probably be pretty easy there from there. Now it's just,
it's going to be interesting, but
first quarter further away, basically.
What are the expectations?
A rally back up to 80 cents, I think, will probably happen.
Hesitation up here as we get to that.
But as you get further away, like, if we start trading side at 35 for a week and then it drops down to 25 or 15 or 10, then
as far as the tightening
it'll be more that gap that I'm thinking it's going to fill, not just
lenders. Are they tightening up?
The further you get away, the harder it is.
They're going to stifle the economy at this point. I think that's a good sector to kind
reverse
of lead
split,
off earnings
bankruptcy, either one of those could honestly be a catalyst
week from Friday. So
to move, or of course any bullish news
of their
Delta secret Airlines master plan
is in there. But Kevin, we're seeing energy leading to the downside today. Also, VIX is still near that 19 level. Yesterday settled at 6-week lows, under 19 level. Dollar is getting down to 2-month lows today. What's your take here on a lot of the asset classes that are moving?
Yeah, I'll maybe jump into Rivian tomorrow.
And in actuality today, they're actually negatively affecting stocks.
Well, I love
to
look at the heat map, and if you don't
I'm a little
use that
nervous,
tool on the investment platform, you probably should. It's only a smattering of green in
an island
pretty,
bottom, right?
It started out as a green day, and it has just drifted to the downside. It's not going down at any fast pace, but we're picking up a little bit of pace here as we get to
we're
the
picking
noon
up
hour
pace, almost
Eastern.
0.8%.
Look at financials under pressure, industrials under pressure. That's, Boeing is leading some of the industrials. Yeah. Energy's a little bit of a shocker with everything going on in crude. Even though crude's not down that much today,
flat,
and it was up earlier.
Down 0.5%.
It was up earlier in the day though,
right.
so that has turned to now negative. So
maybe some profit taking after the gains yesterday, because oil was up 6%, but like
right.
Chevron,
your average
names all had big days yesterday.
Getting worse and worse.
Did. So maybe some profit taking there, but healthcare and utilities.
A rally back to
$1. The only 2 out of the 11 S&P 500 sectors that are in positive territory on that one. But
I think it definitely happened.
We've got ADP, we've got the jobs number on Friday. When you look at the markets and
you see like this rally, this was
NASDAQ 100
on nothing. This was just a cyclical rally. I think it was doing.
In the first quarter.
I don't think it was from the earnings or anything.
About 1/4% yesterday, down about
350%
today.
So
it
kind of
seems like maybe that euphoria is gone, because if you looked at the forward-looking PE on the NASDAQ 100 compared to maybe, or even the tech sector of the NASDAQ 100, it was diverging pretty far from the S&P 500. Valuations on the S&P 500, it was up 7% last quarter. They were still expanding, even though we're seeing all these revisions for earnings coming down.
NASDAQ, S&P, a lot of the big high-profile names that we cover on a daily and weekly basis here had a really good first quarters. Tom, but
there's a new low on BBY, 34 cents. Yeah, I think 30's coming.
As an investor right now,
sunk cost fallacy, isn't that averaging down?
So even if you don't own those names, you've got to keep an eye. It's down 2.2% now.
That's not the.
Remember, that's a big sample size. That's 2,000 names, actually slightly above that. And when that goes down 2.2%, led by a lot of the,
Wish I got more
the
shorts.
regional banks, the names you think,
411 might have been the top. 411.92.
It's just too big to ignore.
Started with the
in terms of overall
inverse
and that is the rally
RSI divergence on the hourly
is broad.
And it's now flat on the year.
The
so
daily now it's giving us an engulfing candle.
The Dow did just finish basically flat for the first quarter also. Some pressure there.
But
small sample size, very big sample
4 hour
size.
rather.
Definitely.
And the daily now is an engulfing
here
candle.
as
Wow.
we continue to leak oil. The S&P 500 now down 0.8%.
I'm going to want to get more shorts today.
Down over 2%. But let's take a quick break.
I don't think this will not become an engulfing candle by end of day. I think we'll probably come up and might wick, but
on a downgrade.
I think this is the top. Not to say it won't chop around, but quite common. Hold on, let me show you. Even though you have the signs at the top, sometimes it just comes down, but like here, you hit the top, but then it just kind of consolidated for 2 weeks with lows and then rallied, and then this was a bear sign. That was inside bar. Then with the next candle breaking below that, that's a bear sign. And then other than that, there wasn't really an indicator other than red candle under the 9 moving average, bearish MACD, and that's an inverted hammer, which is bearish. So that would have been either this trigger, but then you would have to withstand this rally. But the fact that it didn't make new highs is bullish or bearish, or it would have been this indicator, this daily candle. Right now we're on this one, but maybe it won't chop around. Maybe it'll just come down. But there's not a whole lot of data this week to really cause too much of a sell-off, I don't think. Till end of week, so we won't get that. We'll move from that until next week. Getting scared for my GME longs. Averaging down, yeah. Leverage down to get 70 cents average. Yeah. Well, don't start averaging down until the price starts going up. You can still average down even if it's ripping. USIP change. Yeah, I mean that's what I'm saying. That's one of the catalysts I think for the reverse split. Some people say that doesn't. I don't know what exactly are the factors for why I've got the rallies around reverse splits. Maybe it's a share count or recalling of shares, or maybe it's the QSIP change. But we've seen it around reverse splits before, during, or after. So, ways to expose them? I don't know. I mean, it's not like they're not exposed, it's no big deal. Just a small price to pay for them. And they pay the fine and move on. And that's even if they get in trouble for it and whatever. It's a long process for that thing. Or they can just do it and keep it hidden. There's lots of ways they can hide it. Always fall for bull traps. Yeah. So if you zoom out on your time frames, that can help show more. That'll help. It's much easier to trade on longer time frames. Just takes more time for it to play out. But like daily candles, even weekly candles. You know, because if there's a bounce here, it could be a so-called bull trap or a dead cat bounce. But that also could be just showing the signs of the bottom, and it's starting to build a support range before it actually does reverse. And when I think of reversing, I think of I want a bullish MACD, I want price action over moving averages, and I want it on daily candles, I want it on longer time frames. Volume to support it, breaking through resistances, you know, all those things. Not just necessarily like a bounce back up to a moving average. I mean, this thing sold off so much since the share offering that you could get just a dead cat bounce back up to 60 cents. I mean, maybe not, that's pretty high now, but you know what I mean? I mean, look at the moving average. Just this 9 moving average, it was just grinding down, you know, to kind of rally up to it and then reject it, and then had this gap down. I don't know what that was from. Then consolidated, and then literally we hit the moving average, and then gap down. So if we trade sideways here, this moving average is going to come down, they'll meet, or bounce up to it some. But that's where risk management comes in, stop losses, that sort of thing. I got anxious on this play too, because right here gave us an engulfing candle at a support, so that would be a good sign of a reversal. We also had an RSI divergence. Once it failed, which would have been like here, then that's when you just cut your losses. All right, I'm gonna close some of these shorts. Didn't I say I was gonna keep them? I think I did, but I'm gonna close them. I do think today though might be the top. Good entry for the short. We'll see on a bounce. This is actually, I didn't even draw more lines down here. Got this little low from yesterday. Oh, never mind, that's too early. Maybe. It'd be weird if it just started bouncing from here and didn't finish going to the support. Closed out 2 out of the 4. Aren't even options down here. Yeah, that's true. 33 cents on BBBY. Down almost 12%. 30 cents is probably coming. So volume picked up here on SPY also. Could be a bottom, just out of nowhere. Yeah, pretty big bounce there. keep my one. Average Ender just picked up a 4.1349 spy put. Come on, J-Pal. When is J-Pal? He's not till next week, week after. Yeah, we don't have J-Pal. The next 2 weeks still. Whoa, big bounce. There it is. Nice time to get some calls. Maybe I should close. Let's see.
Plus the $70 that you collected on this type of spread. Break even,
yeah,
193.10 on the downside before you start getting real hurt on this one. Your final thoughts?
I mean,
it's a butterfly, but it's a ratioed butterfly is what we kind of call it, right, Kev?
Exactly.
Well, got a long ways to go up to get to VWAP if it makes it all the way there.
And then one long put vertical that creates a butterfly, but it's an unbalance in a different way. We didn't unbalance the strikes. It's $5 each way, but what we did was we unbalanced the quantity on there.
Right.
Won't play the bounce.
Look at an unbalanced butterfly.
Definitely, and no upside risk above that break even that you've got in there. And I think that's kind of the key here is where even if it does rebound and goes higher, you're still going to be profitable.
You make the credit.
But even if it does grind lower, like this analyst is predicting,
would be below this level is 408.
Above that 193.10.
If it starts to grind below 200, you could
408,
put it on for a credit,
so.
take it off for a credit.
Yep. And only about 2.5 weeks you avoid earnings.
Yeah, so right here
on that example trade
kind of
too.
Make sure you know the risk.
Though, base it, Bill.
195.
We'll see by end of day if it's below here. Might not be actually.
And we've got the risk up there just under $1,000 in risk per spread. But
still
it is ratio.
Still really early.
It's
like
transaction costs on that one too because of the ratio. All right, Kev, take a quick break. When we come back, we're going to be joined by Landon Swan from Likefolio
for
discussion on Etsy, which is up on the back of an upgrade this morning.
Interesting, Jamie didn't get any bounce with that. However, it did hold very strong when SPY was falling. 11% on phase. Zim holding up well. MUPA is back up to the price it was at the day after I opened it. Noise. Look for an exit maybe here, here, or here. I only have one of them, so. MCB have a wide spread on, but it's also going in the right direction finally. Corsair is, but I want to get the dip buy on natural gas once it's in. Could be months though. Carvana up 3. Tesla down 1.5. Beijing is holding back its required green light for mergers that involve American companies. We talked about that. Or no, American companies as a technology war with Washington intensifies as the technology war. GM's getting a bounce. Chinese regulators recently have slowed down their merger review. We saw that. The economy is headed for a doom loop. For Nouriel Roubini, the share of people under 35 who reported being engaged with their jobs dropped from 37% to 33%, lowest level since 2011. GM CFO, unlikely U.S. vehicle prices can go much higher. China's Commerce Ministry, seriously concerned about Japan's chip export control, urges Japan to correct its wrong practice in a timely manner. China's Commerce Ministry, seriously concerned about Japan. Okay, why do they repeat? What is that? Tech layoffs in 2023 have now surpassed the entire total from 2022. Wow. The layoffs have just been increasing. I don't think they've been in the news quite as much just because it's kind of a dead horse now. It's not probably getting much views because people have just been used to layoffs. Because I haven't been seeing many big layoffs. Last year it seemed like we're always getting news articles of layoffs. But that's a crazy stat that we've surpassed the entire layoffs from 2022 already, and it's only April. That's pretty wild. JP Morgan says the global expansion is looking even more resilient than expected, raising questions about the likelihood of our call for a U.S. recession and global slowdown later this year. U.S. price target 7 cents, 7A 1 to 20. Keep them on the trading floor at 140. Why do you have a target price of 7 cents? Where does that come from? BY new low, flush through, down 12.8, 33.50. $33.45. 30 didn't seem that far away, but it is actually pretty far away. Pretty big bounce here on SPY. US pledges another $2.6 billion in munitions and weapons aid to Ukraine. Stocks really enjoy the end of a Fed hiking cycle. Here's a chart. $1939. 1939 didn't fare too well. That 1939? Oh no, sorry. 2000. '90s was crazy, man. 30% on the S&P first year. I've also heard the bottom's not in after they start cutting. Ray Dalio said that everyone is losing money as the market faces a terrible imbalance. Bill Ackman's Pershing Squares returned 0.3% in year to date. CNBC pumping gold, all bared up. Ray Dalio said, currently a lot of entities are in financial difficulty. Looks like Facebook, Instagram, and Snapchat are down.
has gotten punished by this market. Pretty glowing note, though, that Piper Sandler put out, even though they only raised their price target from 135 to 140, but they're basically saying things are starting to turn. Your data says not only not that, it says the opposite. It says that in terms of
EVTL
comparing it to other peers, something his note said something positive on, your data says the opposite. This is fun to watch because your data is
using that support as resistance.
Significantly different than an analyst's note that just came out this morning.
Right, and they were downgraded by, I forget who it was. They were double downgraded not too long ago.
Close my bird shares.
Every analyst has got their opinion. You can take ours with the others. I would tend to think that ours does a little bit better over time. Just side note, I'm not short Etsy. I would bet that they are long, so there may be some conflict of interest there. But we just got to go with the data. I mean, this is a company that we loved for many, many years, and especially during COVID. I mean, we were hammering it during COVID. You see that green line go basically straight up, and we were screaming it from the mountaintops. And of course, it paid off really well for our members and subscribers. But lately, you got to go with the data, and the fact that the purchase intent has really been trailing off. It didn't just revert back to the mean and then pick up the uptrend, which a lot of these COVID companies did. A lot of them had that huge spike, and then they fell back down, and then they started going back to the way they were, which was a slow uptrend. This one did not do that. It kind of looked like it was doing that towards the end of 2021, but then it had that kind of a small little bump around Christmas, which is not good. It needs a big bump, and then it fell back off again, going down. And the happiness, again, I hate to hammer it so much, but that is a big move from 85 to 73%. That's a really big move. And the fact that it's continuing downward, I mean, if this gets in the 65 or 60% range, it's just, I mean, that is just terrible for a company like this that is supposedly high quality, custom made, personalized goods. You can't have a low happiness rating on a company like that.
Yeah, and besides the descending line that we're seeing in happiness, Landon, the purchase intent mentions, I think what gets lost here is that maybe that macro environment where people aren't buying things anymore and they're going on trips and traveling instead of, maybe purchasing things. And I see some of that data. You said it's flattening out lately, but it still seems like it's in a downtrend that over the last, 2.5 years.
Yeah, you're right. It is. And if you look at, again, their quarter just ended a few days ago. They have standard accounting March 31st. The quarter over quarter is negative 4% on purchase intent. Year over year, it's much steeper at negative 26%. So even when you zoom into the quarter level, 3 months, it's still down 4%. So you're right. It's not really flat. It is declining. And it's just something that you want to see at least a flat line, but really you want to see the uptrend picking up, and we're getting neither. So I'm concerned with this company long term. I don't think that this particular quarter is going to be terrible. The stock is not raging high. The 150 or so was the 1 year high. It's nowhere near that. It's about 110 right now. If that analyst gets their way, it is up near 150 when they report in late May. And the data stays at how it is, you can expect a pretty bearish call from Likefolio.
Okay, expecting a bearish call there on Likefolio based on the data there.
BBBY. If the price stays here, then we're kind of neutral. I think this is a fairly fair priced range, maybe a little bit lower than this. But if it runs up 30 or 40% from here, then yeah, we're going to be bearish.
Gotcha. All right, great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder of Likefolio, breaking down the data for us. Kev, and he did mention...
Well, my conviction now off of this report by Piper Sandler is shaken a bit after Likefolio's data.
But it did bounce above its 200-day moving average, which could become some support. It has pulled back pretty significantly.
Might start scaling in if we
for the
project
year.
This breakout or this resistance
underperformed,
again up here.
But you've got an example trade here for us, Kevin. Walk us through it.
What I
one
did,
here,
Tom,
if we move
I
up,
looked at the chart.
We get two here.
And if the chart on Etsy turns positive, I'm targeting this 50-day moving average, which is 122, basically and a half, if you see it. That's where that comes to, right around there, right? So if you can get a move up to there, Tom, what I did, a different version of the butterfly, more traditional to what we've been doing, the unbalanced butterfly, which is I bought the 110, 125 call vertical, went all the way out till May 19th, bought the 110, 125, which would 122, that 50-day moving average would be right in the middle there, or right at the top end. And then I sold the 125, 130, so a $15 long call vertical and financed by a $5 call vertical. Spend about $4.60 cents on this, a little more than that now, but this gives you that range if Etsy continues to move up towards that 50-day moving average. If it does, it'd be a nice winner up there.
Yeah, the stock trading just under under 111.
Right.
But you're limiting your exposure here, right? You've got $460 of risk per spread on this one because the debit that you pay is your risk on this. Now, that takes your break even on this spread where you buy one of the 110 calls, sell two of the May 125 calls, buy one of the 130s. Your break even is about 114.60 to the upside. So that's about $4 above the current share price over 45 days. You got a month and a half in this.
Right.
Earnings on May 3rd.
Yes.
On this one. So you'll capture that earnings event, which could be a catalyst to the upside or could be a downward catalyst.
Right. Total risk is what you spend on the trade, so about $460, $465 is the risk on this trade. The margin is about $500 because of the short 125, 130 put vertical, but you'd love to have that problem of it going to 130.
Yeah, and if it does go above that 130 level, you're basically a double on this bout. So your profitability comes down a little bit, but at the same time, on a percentage basis, that would be a pretty big move to get above 130 at this point. But a good look at the unbalanced call butterfly to the upside for a bullish example here in Etsy. Moving into their earnings on May 3rd. All right, Kev, let's take a quick break. When we come back, we're going to take a look at another stock that got an upgrade, and that's ServiceNow, which has rebounded about 23% so far this year. Fast Market's coming right back.
All right, bouncing up again here. See if it breaks through that resistance this time. Rivian's earnings May 9th, around there. I'm just looking at some cash secured puts on Rivian. Premium's not great actually. Could do a put credit spread, but You're just gonna show the price? Oh, over here. Yeah, did that move? It's always been like that. Been like that. Changed. Weird. No, that's a good point though. I'll move it over because Alright, SPY's moving up. GME is also moving up. Rivian at VWAP. Jenny.
And some of the demand trends at names that you just mentioned, like Deckers, On Holding, Crocs, Lululemon, they are actually now more cautious on Under Armour. And actually, the charts speak very well to some of these trends because Under Armour's chart is not looking too hot. But they did say that athletic apparel continues to trend upwards, with 45% of upper income teens citing an athletic brand as their favorite apparel brand overall, led by Nike and Lululemon. But some moderation in some of these athletic footwear companies are starting to show. They think this can be attributed to the strength within casual footwear, including brands like UGG, Crocs, and Hey Dude. Piper also said the most notable move in the survey was the appearance of Deckers Uggs now in the top 10 footwear ranking, which is the highest ranking they've seen since the survey began back in 2015. So Deckers seeing some strength. Deckers looking really nice on a chart basis, now only down about 1% off of their 52-week high, and also up about 12% for the year. Now the actual outperformer of all of these names is On Holding, which is up 88% so far this year, down only 3% from its 52-week high and up a whopping 109% from its 52-week low. And that is the company that is the head of really those On running shoes, which I have some feelings about, but they are very, very popular. You do see them everywhere. This was a really interesting note, Tom, to dive into. Especially, I loved the term high income or upper income teens, because that means that they're just related to upper income parents. There's no upper income teens.
Jenny, On Holdings is an interesting one because that's the small athletic brand whose shoes seem really popular right now. You see them more and more. They've become like the hot brand. We all understand Lululemon, Crocs. Sorry, like Folio. They make me angry when my children wear them, when anyone wears them, when I see them somewhere. Crocs make me angry, Jenny. But On Holdings is a pretty exciting company, and I'm seeing them more and more. They're drifting into my age demographic. They're drifting into the runners demographic. I mean, this is a company that is spreading like wildfire. There's rumors now that that's what Foot Locker is going to start carrying. So there's a lot of things going on with On Holding. This company's growing like a weed. Crocs, not Crocs.
I completely agree. I don't understand the Crocs trends, but all these companies, the theme is they've done a really good job marketing. Crocs is marketed now by having really influential figures like Justin Bieber be at the head of their brand strategy. Really, On is another one that's done a really good job appealing to the influencer market per se. They're all over TikTok. They're all over Instagram. Especially now that we've talked about it, Kevin, I'm sure you'll get more targeted ads that do have these On shoes, and people love them. I've heard some mixed things with like running.
I've never been
distance,
a fan,
but I'm a shoe snob, so nonetheless.
Cool
but
now,
this is a company that's blown up, and you can see that from its price activity. Crocs, I will say, my own feelings, aside, it's been an outperformer really consistently over the last several years. I mean, shares are up 16% year to date, and also up 173% off their 52-week low. So that gets me more excited than the actual shoes, which are a fashion statement, I guess. I'm not sure.
A bad fashion statement. My children have them, so it's not like I'm not a consumer of them. I just detest them in terms of their overall appearance. They're good house shoes. I allow my children to wear them around the house.
You can walk the dog in them. That's what I would say that maybe those should be used for. But I did just get a pair of the On Holdings running shoes. I've worn the same kind for 20 years. It's got a little Swiss flag on it.
Yeah.
I just did a 3 miler
these guys make
on them.
almost $1 billion a quarter.
I know, they're very popular.
That's crazy.
They are very popular. 3 miles, though. Talk to me when you've worn them in, Tom, because I always think any shoe's good for 3 miles. Talk to me when you're like 200 in.
Agreed. And it was on a treadmill, so yeah, it wasn't outside. All right, thanks to Jenny Horn, markets contributor here on the network, breaking down that Piper Sandler teen survey.
How do you wear them with socks?
Big names. I love that fact that she mentioned upper level or wealthy teens. There's no wealthy teens.
There's no such thing. No. That's a bigger conversation. My children may be watching. I don't want to insult them on the air.
Yeah, let's move on to a discussion about ServiceNow. I did get an upgrade today. Let's bring in Kevin Green, senior markets correspondent here on the network, to help us break this down. Stock's done pretty well post earnings, Kev. Under pressure last year, like a lot of tech was, but what's your takeaway here on ServiceNow?
Yeah, this is going to be actually an interesting play as they go into earnings here. And that is because of the technical setup as well as some of the fundamental setups here. We actually did have Baird. They actually upgraded the stock to outperform from neutral with a new price target of $548, and that's up from $475 here. They do believe that the company has the resiliency in the end market, if you will, and they have had durable growth rates for the last couple of quarters, and they do believe that that's going to continue. They also are very confident in ServiceNow's forecast, as they have been able to forecast out and actually put a pretty dismal macroeconomic outlook within their forecast. So they do believe that a lot of this turbulence that we are seeing in the marketplace is already actually baked into their forecast as well. And then last but not least, they are believing that the U.S. government, as well as some other governmental agencies around the world, will continue to utilize their services and build upon the infrastructure that they already have in place. So they do believe that the risk reward is definitely to the upside rather than the downside. But Tom, here is where it's going to be very interesting. We are looking at a chart right now. It's approaching $485, and that has been a significant area of resistance. If we're looking at it, this actually would be a triple top, and so bulls would want to see a pretty significant move to the upside past that 485 level with some significant volume and remain up there for this trend to be able to continue. But if you are a bear, then you could also make a case that a resistance point, a significant one, is being approached here, and they could actually fade before trying to rally back to the upside here. Now, it does have earnings coming out on April 26th, so we do have earnings in about 3.5 weeks here, and that'll give us a little better gauge on how this company is going to perform. It does have some macroeconomic headwinds just to keep in mind here. Software as a service, the customer relationship management software that they also have as well is going to be a little bit volatile as we see mid-sized companies and large cap companies start to try to minimize some of their expenses. We're seeing it across the board, not only just within the services side of the business, but also in the industrial side of the business as well. So having that exposure to HR systems and other things of that nature could be something that they're going to have to highlight within their conference call to give investors confidence here in the near future.
Digitizing your workflow, Kev. It's a popular theme lately, and the durable, resilient growth that Baird talked about, you know, this is a big upgrade, Kev, to a big number. It's currently trading right at their old price point. They raised it to $548. But Kev, you mentioned what might be the most important thing about this company is the chart, and it's getting close to a breakout here above this level. Well, I'd say, what, 485, right around there. If it breaks through there and sustains that, Kev, it's probably got some room on the upside, correct?
Yeah, definitely. And that would actually provide not only just this company, but a lot of these companies that focus on software as a service or these customer relationship management systems, that would provide them a little bit of catalyst to the upside here. And that sector has been having some issues. Different pockets have had some headwinds here. But if they could clear that hurdle, that could also give them the move to the upside. So, Kev, you are absolutely right. From a technical standpoint, it's more of a bearish setup, if you will, than a bullish setup. But if you get that breakout above and it can remain above that price with some strong volume, that's all of the ingredients that you need for continued breakout to the upside, which could validate this price target that Baird has set.
All right, great analysis here, and thanks for the background here, Kev. On ServiceNow, that's Kevin Green, Senior Markets Correspondent here on the network.
Malaysia and China to discuss Asian
Kev,
monetary fund to reduce dependence on US dollar.
Subscription revenue starting to slow a little bit.
I'm surprised the dollar hasn't really
last quarter
sold off from all this.
Up 27.5% on a constant FX basis. That's down a little bit. Q1 subscription revenue, they expect to be up about 22.5%. That's a little bit lower. There's macro environment, but then the total addressable market. The CEO always talks about that. They've got so many clients over $1 million as far as their contract goes.
Gives you hope for the future when these companies talk about what their potential is, what their total addressable market is. It's just one of those talking points in a conference call or in a presentation that gives people hope. And Tom, digitizing your workflow is certainly not going anywhere, right? It's just the momentum is going towards them, not away from them. But valuations, is maintaining your growth levels. It's an important part of the stock activity, but the chart Kevin just mentioned, if it can hold this level or stay above this level, it looks pretty good here.
Yeah, in early February, it did go above 485, but then immediately pulled back. So there was no confirmation on that. But I looked at a strategy here. We kind of looked at your call butterfly in Etsy. So I looked at a different strategy in here that's 4 legs, but it's called Condor, where you can take a directional bias based on a risk-defined
unless the dollar's coming down with the market.
Went out to that same April 21st weekly series, so you avoid earnings, but if the stock does rally into earnings, maybe that's a benefit for this type of strategy. 4-legged spread, buying one of the 475 strike call, selling one of the 490 strike call, selling one of the 505 call, buying one of the 510 calls. You're paying roughly a 610 debit for this. Each one of the wings on this condor is $15 wide, so you have that potential reward between the short strikes of 490 and 505 for this to basically get about $900 in
50, 200, all add and
profitability on that. You break even 41 to the upside,
ones I always
so
up here are
not
the
too
9
far
and the 180.
above the current share price, only about $4.
Very similar to the
but I've been leaving the
butterfly
50
that
on
we
there
set
too.
up.
They're
but
just a
you
simple
took
moving
those
average, not the EMAs
middle
or anything.
strikes and spread them apart by
It's
about
suspect.
$15, right?
I mean, not the media,
You've
like,
got the
I think that's real.
475, 490. Then you've got
the dollar is gonna
490 to
lose its- I think it
505,
might
where you
lose
get that
reserve
landing
currency.
area up there at the
I mean,
top.
I don't know why that wouldn't
and
crush the
then
dollar.
you've got some decreased
reserve
level
currency.
of profitability if you go through 505. But this is very similar to the trade we did in
50 and 200.
Etsy.
Those are pretty
but
popular ones. I just
different in a
don't
way
usually
because
put-
you spread out the strikes.
I'll like
instead
throw the
of
200 on,
selling
but I don't
2 of
usually
the
leave it on.
490s.
Right.
50 I've been
the
leaving
call,
on, but I like
the
to
call
keep my charts
butterfly in
as
this
as
type of
possible. I
example
don't
might
like
give you
a ton
more
of lines.
profitability right near the short strike. This kind of flattens it out a little bit and gives you a wider range for the apex of profitability, which is
like
between
UEP I get for
those
January
2 short
24.
strikes. Each one of those, if you pay $610, there's your risk, $610 per spread, but you need it to grind higher. That break even's less than 1% above that, Kev. Final thoughts here, Kev, before we wrap it up here. SPOOs or S&P 500 down about 0.7%.
Yeah.
Off
Slight
of those
comeback
session lows.
since we came on the air.
VIX ticking up about 5%.
Lower dollar, lower yields. Yeah, I think it'll be hard to sell them off. Sell them off pretty significantly with that happening.
Yeah, we'll have to wait and see on that. But positive data, according to the Fed, on today's JOLTS report. But market not liking it at this point, not liking the fall in the dollar and yields. All right, that's going to do it for us on the Fast Market. Stick around, though, right here on the network. Next Gen Investing is coming up.
190 is very specific. Seems like you need to be at kind of an area, like a range, because it did it at 101.46 today. 198, huh? I know it's a fib extension, but you don't give any like leeway. I guess I assumed as much. Depending on how high your high is and how low your low is on the fibs, where you draw it, I mean, there's some margin for error. In that area, yeah. But 101.46. guess it's not that close. Oh, sorry. Volume? Yes, there is volume on BBY. Should take a look at how much it is. Down 11.5, so it did have a little bounce there from the 33.25 level. I think it'll probably be less volume than yesterday. Yeah, yesterday's volume was big, it was increasing. So, less today, I think. Which is good. The red volume, with that to slowly decrease. Or quickly decrease, but not to slow down. Hey, Tasty. When Bobby costs free? When you can't buy it. Buys him at 0. It's no longer for sale. Always supported 0. GME coming down a little bit. Same with SPY. Yeah, 1. 1 could be it. A huge move up from here still. $1 is 200%. But I could do that quickly. As we saw here, this was 350. GME insider buying. Brian Cohen starts buying. That's definitely a catalyst. I don't know if he will or not. Larry Chang bought last week. Institutions buying, whatever funds buying, or just its cyclical pattern of rallying. But I don't know where we're even at on that, because maybe that all happened just with that after hours. So for me, it's just the chart. The chart's looking bullish. So whatever happens when that happens, someone's buying, more buying than selling. And then if it, if it gets high enough, it might start to get kind of out of control. I don't know where that price is yet. Yeah, there's definitely lots of catalysts that can happen. Share buyback, dividend, insiders buying.
At other company locations. So this is not necessarily a hard layoff. It does seem, as according to the reports at least, that these affected employees will be given assistance to find other roles at the company. I think that is so hugely important to this narrative here. But these 2,000 layoffs will include more than 1,000 roles at a warehouse in Fort Worth, Texas, along with 600 jobs in Pennsylvania, 400 in Florida, and 200 in New Jersey. Now, so I just think that it's very important to keep in mind that they're not necessarily just straight up laying off 2,000 workers. But Walmart is massive, and Walmart has since avoided some of these mass layoffs fairly well when you compare them to other names like an Amazon, which announced eliminating 18,000 cuts, and then following that announced laying off an additional 9,000 jobs. So Walmart's been able to somehow stray away from that course of action. I do think it's important, though, to read into the individual details of this story, Alex, because it doesn't necessarily seem like, things are going awry right now at Walmart.
Yeah, and I think that's why this is such a uniquely interesting particular headline is because, for one, they're going to do their best to try to replace these employees. Probably not all of them are going to find a new role, but that's okay. They're going to do their best to try to do that. But to me, this is like the tip of the iceberg, if there's going to be an iceberg. Walmart employs so many workers. If they start tightening that belt loop aggressively and have to start laying off, that's a lot more worrisome than some tech firm that has 500 employees or 1,000 employees cutting their staff by 30%. Very small adjustments in workforce at Walmart can have very, very big effects. So I'm going to say down vote today, but this is certainly a story to watch, and hopefully it all remains sort of along this sentiment if we do get more of these. They're sort of replacing workers or doing their best to do so. Next we'll know on the list, though, is Ford. We're getting a lot of those monthly sales and delivery numbers starting to roll in, quarterly numbers. So
it's still early, could rally up to VWAP.
Okay, and just to speak to Walmart really quick, they do have 2.3 million employees. I just checked because I find that fascinating how massive they are. But Ford today lower down about 1% in reaction to its first quarter vehicle sales that we did get this morning. They did announce that they were the best-selling brand across the board in first quarter, with total vehicle sales of around 456,000. This was up almost 11% from year-ago levels. They noted that this sales growth was driven primarily by a near 20% truck sales growth figure, 86% sales growth in their Ford Pro Transit van, their 48% growth in the three-row SUV sales, and the Ford Explorer was the best-selling midsize SUV now in America, they said, and a 41% spike in EV sales specifically. They did announce plans to add a third crew to their Kansas City assembly plant in April in order to then increase production for its Transit and E-Transit vans. Additionally, they also unveiled intentions
good.
to increase production at manufacturing plants
That breakout was
across
big,
North
that
America to
535.
meet what they said was very strong customer demand. So positive for Ford, but just like Tesla, yesterday we saw shares lower in reaction to its first quarter numbers. Ford shares not able to get a lift here on what was, I'd say, some pretty positive news from a name that has struggled and had several missteps so far this year.
Yeah, it seems like what the market's really clinging to here, and of course, got to put in the context that there is a little bit of a risk-off sentiment today in general. The market itself under pressure, but is that it seems the big headline takeaway isn't that there was sales up and things are actually looking incrementally better. It was that GM jumped them on the list of how many EVs were sold. So that seems to be the focus, and unfortunately, that's perceived as negative. But I'm going to say down vote for Ford. We'll keep our eyes on it, but pretty quiet reaction, not even down a full percent. Last one, though, is Apple. This is a name that could find its way onto this show in some capacity every single day. Can't understate its importance. The only name that maybe gets more attention and more activity is Tesla. This one is the biggest. It's almost as active as any name, and it has been a consistent performer for as long as I can remember.
It has, and so this is one of the more painful headlines. I have to say that we did get reports that Apple is cutting a small number of positions within its corporate retail teams. The company is eliminating jobs in what it calls its development and preservation teams. Such groups oversee the construction and upkeep of the company's retail locations, as well as other facilities around the world. Why I think this is so significant is because Apple has been one of, if not the only, mega cap name that has been able to avoid some of these layoffs. Now, they didn't exactly entail that they are laying off a certain percentage of their workforce, like names like Alphabet, Microsoft, Amazon, and now, I guess, Walmart. But I do think that they've been able to sort of skate by relatively well. So to read this is disheartening because I was really rooting for Apple. But obviously necessary shift here, as we do know this has been deemed the year of efficiency. Apple is not immune to some of the headwinds that have plagued some of its other tech peers, but not even really seeing a negative reaction today, Alex. I think I'm more heartbroken than the market even is.
Yeah, and I think it's just, good companies, of which I think Apple objectively has proven itself to be, have to make tough decisions at times. This is sort of the moment where we're seeing many of these companies do that. Apple's done its best to not have to make those tough decisions, but even Apple not immune to the economic conditions. Going to say upvote, though, from a trading standpoint, from a chart standpoint, I think this one is always a fun conversation. So looking forward to the chart with Rick.
It is, and one of the most volatile or highly traded names per se. So Apple always worth diving more into the charts. So we'll be looking at the technicals in both Chipotle as well as Apple coming up next. We'll also be looking at some example trades. Stick around to Next Gen Investing. We'll be right back.
collapse and fall apart. It's more of just an idea that this could be a likely place to start looking for some consolidation or a stall in trend. Certainly not a guarantee, just this is where we might make an educated guess to find price behavior like this, especially also because we have not surpassed our old high close near 1748, which is this red dashed line all the way back here. So looking at to contrast this a little bit here, looking at our RSI, our measure of momentum, we're pretty firmly in the overbought area there. So it's a sign that the momentum is favoring the bulls here and favoring kind of the upside movement. We did also gap up today. We're still up a bit on the day. So perhaps, you know, we could be in for just a momentary stall in this upward trend. So let's zoom in a little bit and look at some support and resistance here. We can see, as I mentioned, the 1748 level, that red dashed line. If we do break to the upside, if we start getting some new yearly highs, take a look up here. That's our +2 standard deviation channel right near 1861. So that could be an area to keep in mind if we do start getting some more strength to this uptrend here. To the downside, you know, we've got the 1656 level. That's this green dashed line. And that represents an old high close that we had recently back in February. That seems like that could be a place to start looking for price to stabilize if we break through our channel. Our channel comes in right around maybe perhaps 1760 or so, right around that point. So 1650, or excuse me, 1670 to 1660 or so. Around that area would be where we've got that trend line. So a couple areas to watch for here and to consider.
Yeah, and Rick, I mean, 1660 seems more reasonable than this price rate we got today, which was like 1940 out of Oppenheimer.
Really
obviously, this name not typically seen as perhaps as accessible, just given its relatively higher price tag compared to, you know, most of the names we talk about here on the show. But Alex, from trading this name now, considering its price tag, obviously options are seen as a more capital efficient way to look at some of these high priced stocks. What are you thinking in terms of an example trade, leaning into some of this optimism we saw today from Oppenheimer?
Down 12%.
Yeah, and sort of splitting the boat here a little bit, considering that Rick kind of painted that a little bit less optimistic picture. Maybe there's some room for some, you know, sort of sideways or even underperforming price action in the interim as well. I look at a neutral to bullish strategy. So while you mentioned that options can sometimes be a more efficient or capital efficient way to gain exposure in an underlying, especially bigger price tag ones, option spreads can even be more so, as you can do something risk defined and actually build something that takes the amount of risk that you're willing to take. And so I looked at selling a put vertical going out to April, in particular looking at the 1695, 1690 put vertical. This was really less of a function of selecting strike and more of a function of the pricing. And so we often talk about, you know, somewhere between 30 cents on the dollar. Sometimes I think about it in terms of risk and reward. In this case, I looked at a 3-to-1 risk reward, collecting a quarter of the width of the strike, so $1.25 on the $5 wide spread. That just happened to coincide with a market just below 1700. So perhaps that big round 1700 could act as support as well. The break even, though, in this case would be a price tag of $1693.75. $375 in theoretical risk if this were to be entirely in the money and these options went through assignment and exercise. If they were to expire, again, that's most likely if they're out of the money at expiration. Simply just keep the credit. So $125 potentially is the max profit, not accounting for the transaction fees. Straightforward risk profile. We start in that max profitability zone, Jenny, and this is one that's looking for just a holding on to these recent gotten gains. Doesn't even ask for any more.
Yeah, and I think that's really well put, and obviously a way to look at this name, like I keep mentioning, but it is just a relatively higher price tag. Now, our next name today is Apple, and Apple is doing a whole lot of nothing, but Rick, I guess that's more optimistic than shares, you know, significantly to the downside here. Shares are just pretty much relatively unchanged on the day. So what are you seeing from a technical front? Because Apple is so important to the overall market, just given its exposure to the major indices.
Very true. And kind of a similar situation to our previous chart. We've got a narrow, kind of tight upward channel here that's coming up to some resistance in the form of one of our standard deviation channels. In this case, we're looking at the +2 standard deviation channel in orange there. So the differences between this chart is that we're kind of cruising above the old resistance that I had mentioned here, above that 163 level. That's around where we had this this high close. We closed a little bit higher than that, but we are making our way above it pretty handily here. So this 163 mark now becomes a point of potential support to keep an eye on here. If we do start to falter a little bit, the 167 level, that's about our +2 channel here, so that would be an interesting point to be watching here going forward. We're also seeing a volume node forming around this area near about 166, 167, so it suggests that there is some buying activity happening around these levels. There's some conviction on the part of traders here, so that's another interesting thing to keep an eye out for and see if this node continues to develop. Looking at momentum, our RSI, trending upwards once again here in the overbought area, just like our last chart here, so that's a sign of strength. And remember, overbought is kind of a perhaps misleading word sometimes. People might think it means, oh, the stock's due for a pullback, we're overbought here. Well, typically it's regarded as a sign of strength, though. Now, it doesn't necessarily mean it's always going to play out that way, but that's more how it's regarded as being, as if the stock is going into overdrive, perhaps. So look for momentum to continue favoring the bulls in this case here. Now, let's zoom in a little bit and look at some potential support and resistance more closely. As I said, we've got the +2 standard deviation channel coming in right around the 167 mark. Just above that at 170, we've got our old high close there. So we've got a fairly narrow range to be on the lookout here for some potential resistance. The 163 level, this red dashed line here, that was another point where we could have seen some potential footholds developing there based on our old high closes once again.
So momentum's still in the hands of the bulls here, like you said. It was still in a pretty sizable uptrend, and despite some of the hiccups we see in Apple shares, but I think that can also be correlated to some of the hiccups we've seen in the overall market, frankly. But we'll leave it there. Appreciate all of the technical insight, as always, Rick Ducat, our chart master. So Alex, when trading this name, say you're taking on a more optimistic approach, as I do think this name has no sells ever. It does feel like, at least from the Wall Street community, this is a name that is so loved by so many analysts. Really capitalizing on that. Walk us through an example trade, then leaning more
bullions
bullish.
Has been a lot more.
Yeah, Piper Sandler loved the stock, still had it under overweight, even in spite of the headlines. The stock itself, as you mentioned, has been that consistent performer. It isn't often a giant mover, though. It's sort of slow and steady oftentimes, and so you got to bear that in mind when setting things up and trying to set expectations for what may happen. I thought Rick did a good job of showing some levels and just how closely condensed those levels were. He talked about 163, he talked about 167, he talked about 170. All of that is in a very small sort of area. And so if we kind of keep that in mind as well when structuring our trade illustration here, again, if you wanted to be bullish, I looked at something that looks to do just that and looks for an outlook of the stock being a little bit higher here, benefits from that. And so going out to the April monthlies, I looked at simply buying a call vertical. So this is the call bullish counterpart to the short put vertical. You slip it around, you buy the call vertical then. And in this case, I'm buying the 165, 170 for this illustration. We oftentimes talk about kind of our setup being, one strike in the money, one strike out of the money. We have that here. If we're able to do this for a 250 debit, that would mean our break even, you simply add that debit to the long strike, is 167.5. So that kind of corresponds with that first potential resistance point that Rick had highlighted. And so if it ran out of momentum around that level, it's pretty close to break even and expiration. If it's able to break through and get to the next level, well, that was 170. That's where this one peaks out. That's the max profit zone on this one. And this is a strategy with the risk and reward equal. So it's a 1-to-1 ratio. That means risking 250 for a potential reward of 250, neither accounting for the transaction fees potentially associated with the trade.
Breaking out to the upside there.
But this is one that's it's pretty straightforward, I think. You're looking for a move higher. You're risking the same as what you can possibly make. And it's set up so that it benefits from a move higher, but it doesn't need a meteoric rise. It just simply needs to get to 170.
I think that's really well put. And obviously, I think important to note that, like you said, it doesn't need necessarily some hugely bullish activity just to sort of trend, on par with where we've seen it. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. We are diving into a Piper Sandler report on the athletic retail space, On Holding specifically, getting a nice lift.
Sounds wrong. Yeah, you go on his stream for like 10 minutes and you're just like, oh my gosh, I gotta buy more. That's just my assumption. There's a little pop on BBY. Up to VWAP with some volume. I didn't get any calls on this dip today. Oh, that was a bigger pop there. $33, is that the low? Go ahead, Jenny.
The lawyer representing the stockholder group stated that stockholders of AMC common stock for one share of common stock AMC common stockholders will receive one share of common stock for every 7.5 shares that are held following the reverse stock split that's also going to be carried out here. So just kind of keep in mind, once again, there's a lot going on. There's 3 items that are going on right now. One is going to be the conversion of the 8 shares to AMC shares. At the same time, they're going to convert or do a reverse split for 10-to-1 AMC shares. So for every 10 shares of AMC, they're going to reverse those to 1 share. So basically multiply the price that is currently trading at right now by 10. And so if you own 10 shares of AMC stock, you would have 1 share of stock post this reverse split. And they're also obviously paying out the 1 share to these existing shareholders, which is expected to be around $100 million worth of value. It kind of depends on when this is actually going to take place and what the current market cap or market price of the stock is going to be. It's not going to resolve the issue of dilution, which is why you are seeing the shares still moving to the downside here, Jenny. But it is a small win, if you can call it a win, for those existing AMC shareholders that were very upset around this conversion and their lack of voting capability, basically, after this overall conversion would have taken place.
Yeah, and I felt like that was such an interesting story, the way that a lot of these shareholders were upset, and it felt like rightfully so, because they basically like lost their voting power altogether. So interesting, I guess. Yeah, step in the right direction to finally get some closure here with this story. But I'm curious your thoughts on then when looking at the APE shares, right? Because APE is actually up 9% today. I find that relationship frankly confusing, but typically when we see AMC shares now lower down almost 23%, it's odd to me, correct me if I'm wrong, but to see APE then higher on this news.
Yeah, definitely. So there's traders that are trying to complete an arbitrage type of trade here. They're trying to either trade APE in order to offset AMC or vice versa. And that was actually one of the bigger trades that was actually taking place here. You actually had a lot of hedge funds and larger traders were actually shorting AMC stock and buying APE shares. And the reason for that, the preferred shares actually have a higher hierarchy when it comes to any type of bankruptcy or if the company were to go bankrupt, they would have a higher claim on assets, if you will. So that's what the actual arbitrage was. So you're still kind of seeing that situation take place here. You're also getting some traders getting into the APE shares because once again, they're kind of the ones that are going to benefit for the most part for this conversion. The APE shares did get hit pretty substantially. We also just have to keep in mind, even though we are seeing the stock move up significantly today, or those preferred shares, the issuing price was considerably higher than what it's trading at right now. So, I mean, it's been a lose-lose if you're an AMC holder, an APE shareholder, but you are starting to get some players trying to get into the APE shares just because of some of the hype around this news. Once again, just kind of keep in mind, reverse stock splits do not change market value. It doesn't change anything fundamentally with the company. It's more aesthetic type of feel for an investor to know that they're trading a $30 stock instead of a $3 stock. There's a lot going on. It's rightfully so. You are seeing these moves happen all at the same time. It's not suspect to say the least. They're trying to hype this up and trying to make shareholders feel good. Once all of this is all settled out, and somebody that owns 10 shares, they see that their share is now worth $30 or $40, and then the APE shareholders also feel good as well. But once again, if you look at it from the basis of where these were issued, everybody's pretty much at a substantial loss if you held this throughout all of this controversy.
I think that is such an important point because, like you said, we're not increasing the value. I mean, this company still has some substantial debt issues that they need to take care of, and I do applaud the way they've been able to raise cash and sort of, manipulate things to the upside here. Adam Aarons is a very innovative CEO, but I do think, to your point, it doesn't change the value, which is a really, really important takeaway here. But we'll leave it there. Kevin Green, Senior Markets Correspondent for the network. Appreciate all of the thoughts on AMC. What a move lower today we're seeing. But now to look at something more positive, I'd like to bring Alex back in. We're discussing this Piper Sandler note on the broader retail space. But Alex,
that's
on
interesting.
holding, I've honestly never discussed this ticker before. I'm very familiar
with
the shoes,
BBY was just kind of a fake out, looks like.
These shoes are everywhere. I mean, I'm not sure if it's just me now. I'm getting like
targeted
wants
ads, to keep going.
But they are all over my feed.
VWAP, I'd say.
Yeah, so this is not a space that I'm like super close to, right? I'm not the most fashionable guy, believe it or not. I don't do the running that often. We were actually a couple weeks ago talking about running shoes. I had to have you list off a bunch of brands, and I eventually figured out which one I have. But I will say, they got some pretty good looking shoes on the website. This particular brand, they have certainly built up sort of their targeted ad presence. They're definitely sort of one of these new upcoming names. But this seems like a crowded space. And to me, if you were to ask me, as sort of let's say a kind of a casual runner, I would just be like, I think I would want Nikes. Is it still Nike the king, and then it's like the Hokas of the world, the Ons of the world, or sort of just playing for the scraps?
Yeah, I would say Nike is still king, frankly. And I get a runner's magazine monthly because I'm a weirdo. And it is still so dominated by names like Adidas, Nike. I mean, Under Armour is even actually a frequent flyer on that list of the top running shoes. So Nike is still seen as the elite, the premier brand. But several of these newcomers, I will say, are getting a really great following just based on the fact they've been able to market themselves really well.
So let me build on that. Since you are close to this is something that is close to your it's a hobby of yours, let's call it. You like to run. If you're an avid runner, aren't you going to wear whatever is the most efficient, the best shoe for your type of foot and the best performance? It's not necessarily going to be solely aesthetically based. So you can make a good-looking shoe, you want a good-looking shoe, but really in the end, you don't want to have hurt feet, right?
Totally. And I would say that aesthetics are the last thing on your mind. And I think this is a really personal, like, it always bugs me when people try to recommend shoes because it's a really personalized thing to you as a runner. But yeah, On, I will say, well, it has a great aesthetic. It's a good-looking shoe. Does not stand up to the mileage if you're like a weirdo runner like myself. But we did get a note today from Piper Sandler that was more optimistic on this entire space as a whole. Following the 45th semi-annual survey with teens, they are coming out with more confidence on some brands, specifically like Deckers, On Holdings, Crocs, and Lululemon, while being more cautious now on Under Armour. Now, the athletic apparel continues, they said, to trend upward, with now 45% of upper-income teens citing an athletic brand as their favorite overall apparel brand, led by Nike and Lululemon. To your point, Alex, Nike is still premier here. But some moderation, they said, in this athletic footwear mind share has started to slow. Piper thinks this can be attributed to strength within casual footwear like brands UGG, Crocs, and Hey Dude. Piper did also say the most notable move within this survey was the appearance of Deckers Uggs in the top 10 footwear for the first time since 2015, because Uggs are apparently making a comeback. This is very cool among the younger generation, like my brother's age. I don't get it, but I am here to support it. I was once a part of that trend, probably in like
BY is holding above BWAP now.
But really seeing some optimism today in On Holdings. It's up 88% this year. It's up 109% from its 52-week low. And I will say that I was discussing this story on Fast Market today, and we were sort of hating once again on Crocs.
Rejecting that 50
Crocs,
moving
though,
average.
on a year-to-date basis, is up 15% this year. It's up over 173% from its yearly low. So while Crocs shoes, not my style, I can respect the chart. And Lululemon, another name that's up 15% this year after a nice pop following its earnings. So these names are seeing that outperformance this analyst speaks to, outside of just being cool among teens. They're cool among shareholders because their returns have been pretty solid.
Yeah, and it goes hand in hand, right? I mean, Lululemon wasn't second on that list 10 years ago. This is a newcomer that's a major, major player. As investors, we're doing our best to try to find those companies before they're the Nikes of the world, before Lululemon is what it is now. And a good way to do that is this company popular? Does it have consumers? Does it have important demographics like teens interested in its products? And so much of this is the effect of things like TikTok. When there's a particular model of those Uggs that got popular around the holiday season last year, they were nowhere to be found because TikTok just makes things balloon so quickly. It's just the best form of mass viral marketing for these particular companies. And so to see a company like On catching some of that early momentum amongst a really important demographic is great. And that's what you want to see if you're an investor. So I'm not at all surprised today to see the stock jumping on that.
No kidding. And I think that you mentioned TikTok, it's such a good point. It's one of those things that's like, if you can't beat it, join it, because I do think, our own feelings aside, and so many people's right now, and the government feelings aside, this is such an influential tool that is really changing the way that we perceive brands and the way that we are then purchasing brands. Because if something blows up on TikTok, it's almost impossible to get. It's crazy actually how well some of these viral trends work for certain brands. But trading this name, Alex, tell us your thoughts here, because this is a nice day move higher today. Nice move higher this year. And On, I mean, just really, relatively speaking, a newcomer. This is a Swiss-based company, but looking to get in on perhaps some of this upside here, I think, is the FOMO feeling today.
Yeah, I think so too. And I think this is one of those companies too that any sort of added interest continues to magnify this brand. And so it's already, a pretty massive company, but it's no Lululemon, it's no Nike. But the more interest it can stir up, the more excitement around the brand, you can see how it can make serious inroads on those companies that are already dominating the space. And so I looked at something that would look for a continued upside move. Obviously, it's making a massive, massive move today. You can't entirely discount that. But say you wanted to see this stock continue to surge,
even though the IV's high, it's still kind of
that would benefit from that. And so I looked at the calendar spread to the upside here. It's in April, May, so it gives us a little bit of time. But this is really looking for a pretty sharp move in fairly short order, given that this stock will have to rally, well over 10% to get to 37.5. But the other beautiful part about the calendar, and we look at this every time we look at the risk profile. So this particular one is the 37.5 April, May call calendar. Buck debit would be $100 in total risk. But as we look at the risk profile, is yeah, it peaks at that strike. That's the best case scenario at the expiration in April, but there's a pretty wide net cast around it. So any sort of grind towards that price doesn't need to be perfect. There's a likelihood that this one could expand, because that's ultimately what you're trading. If you're doing a counter spread, you're essentially just trading the relationship between that shorter term option and the longer term option. And the more
as far as stock price.
closely those options are to the money, the more time has an impact.
Market cap's only 8 million.
And that's why you'll see that sort of a profit graph for this type of trade.
Yeah, I remember.
Very, very interesting company. I haven't seen the ads yet, so I'm going to be on the lookout to see if they suddenly pop up now. Or I haven't really seen them, boots on the ground either. That's a good looking shoe. I might have to get myself some.
Just exercise.
I did. Okay, I have. I feel like once you recognize like the on brand, now I see them everywhere, and I think especially now that we've talked about it, somewhere my phone is picking up all sorts of different targeting advertisements. I'm sure we'll have them all over our feeds, but we'll leave it there for FOMO. Now coming up next, it's time to look at another name actually.
Good to see you got your confidence back, Al.
That is Etsy on the back of a positive analyst note. Shares are up
like
over
5 the other day.
We'll discuss that more with Caroline Woods coming up next.
Yep, Bob was looking nice. I do recall you picking this up yesterday. Yeah, yesterday was a good dip buy on it if it keeps going. Impeccable timing. That's streaky. Impeccably streaky timing.
Let's get nuts!
Let's get nuts! Thanks, Ace. Oh my gosh, man. Dude, chill out. Chill out. I'm not upset I got calls. Oh my gosh. Thank you, Ace. Appreciate it, man. I just want to say, gotta be chill. This rally is still pathetic. This pathetic. Thanks. Oh boy. Ooh. Well, I liked that the options hadn't climbed up yet. They're trading between 6 and 7 cents all day today, so they're still at 7 cents. If they moved up, I maybe wouldn't have gotten them. But if you think about the shares, you know, you could have gotten shares for 6% less, so. BBBY kind of grinding up a little bit. It's only down 6.5% now. I'll look out for other indicators on longer time frames. We've got a bullish MACD on the hourly. I wouldn't really count that engulfing candle. Maybe you can because it's barcoding and it's penny stock. No, I got 50 cents. They didn't add any. I just got these out of the money. But I got them for April, 17 days. Let's see, so on the 4 hour, oh, interesting. Okay, yes, you have a tiny RSI divergence on the 4 hour from here to here. Lower lows there, higher lows there on the RSI. That's bullish. Buy kind of rejecting here, coming down. Little inverse beta would be cool right about now. BBBY is slowly climbing up. Less than 6%. See if it gets rejected. Really need to like fill this gap and kind of be up here above 40 cents. Close up there. You can buy any strike, any price on the options chain. Doesn't have to be at the money, right? So Even though the price is way lower than these options, I can still buy an option for $3.50. Sashimi! Thank you, big hugs. Appreciate it, man. I don't know if I've ever had sashimi. I think I've had raw fish, but that's it. Is that the same thing? That all it is?
Now is the time to buy. So they upgraded Etsy to overweight from neutral with a price target of $140.
It's
That's up from $135, as you can see there. It's trading just below 111, so that implies more than 25% upside from current levels. Piper Sandler says Etsy should see a reacceleration of active buyer growth over the medium term, which could continue to support share gains. As for who is doing that buying, the reacceleration of buying, the analyst actually points to millennials and Gen Z customers, saying, we think that core marketplace strengths of sustainability, intention, and personalization fit well into core values of Gen Z and millennials. He thinks that personalization plus the huge variety of items that Etsy has available on its site really sets it apart from its competitors. The analyst does acknowledge the choppy macro picture that we're in, the storm clouds, as Jamie Dimon from JP Morgan said in his annual
BBY is
letter.
only down 4.25%.
Especially in the nearer term, on its earnings call in February, Etsy did say that macro pressures and the data that it had from just consumer spending so far this year had it very cautious. They're taking a very prudent approach to business, but this analyst is confident in the company's growth opportunities in the medium to longer term, also specifically pointing out EBITDA margins. So definitely bullish on this stock today, getting a nice bump up 2.5%. And, you know, it's performed. I mean, this is a stock that's been all over the place. You know, we saw it surging higher during the pandemic. It's up about 66% from its lows, but still about 25% from its highs. So this 52-week highs, I should say. So this analyst sees it getting back up there.
Yeah, it's got a long ways to go, obviously, get to those pandemic levels. Maybe that's not in short order, but it's building on its recent momentum. I know it's struggled a little bit to start the year, but like you said, it's well off the lows.
Head. I kind of saw that. I mean, we broke through that.
The lows keep getting a little bit higher, and the highs keep getting a little bit higher. That's a good sign, typically.
Not as much of one
but
as
I think if I was looking at this, the fact that teenagers are on here, that's a good sign, especially if they got access to mom and dad's credit card when they're shopping. But
maybe it was today at 411. It very well could have been.
Yeah, even if they have their own jobs, they have more discretionary income to spend that doesn't have to go towards groceries and rent. But you know, I was curious because Etsy has continuously surprised even me. You know, you'd think as consumers start to pull back, a company like Etsy could, you know, kind of get the tail end of that, or you know, it could impact the bottom line for Etsy, but they've actually held up pretty well. So I was curious to see how this analyst's recommendation fit in the wider picture. And actually 50% of analysts at this point do have a buy rating on Etsy. 43% have a hold rating, and then less than 10% have sell rating. So analysts largely bullish on this name, despite so many of these pressures that we've seen. But you know, Etsy really has been able to kind of pivot. First, it was the masks that everyone was buying on there, and then it was all the home goods that they started buying. And then wedding season came, or you know, all the weddings could come back. And weddings have been super popular for Etsy, so they've really been able to appeal to a wide audience, a wide customer base, but also kind of really follow the trends, and that's worked well for Etsy, and Piper Sandler thinks it will continue to do so.
Yeah, and a great resource for some of these small businesses, which is why I buy jewelry on Etsy specifically, because I do feel like I'm supporting small business, and it's relatively, you know, very affordable. So for that reason, I can see this being, you know, having that appeal to, say, this younger demographic that perhaps is looking to save some costs, or like Alex said, using their parents' credit card, which I'm jealous, I have to say. But we'll leave it there. Appreciate all of your thoughts and good insight, actually, on running shoes. Caroline Woods, Senior Markets Correspondent for the network. Coming up next, it's time for Under Authority. We are looking at a name that's not looking so hot today. The C3AI shares are selling off on perhaps this short report tweet we got from an investment firm. We'll dive more into that headline coming up next.
AI got a short report. Holy smokes. That is a brutal sell-off. No idea. I guess it's not that crazy for how much this thing's gone up. Red Owl, weren't you all hyped on AI? Someone was hyped on it, which it did. It made the move. I was seeing a triple top, and it broke out of that, so I was bullish, but it's not looking good now. Maybe it is. Maybe just overreaction. I wicked up there. I'll probably hold these. Hold the normal one. NA. Maybe the lineup. Yeah, BBY moved up a little bit, but VU up. Retraced what, like 7%? The losses it was down today? Oh, not bad. Made 300. For 1 segment. 75%. You need more than that. If I would gap fill you and put you at, is that what you want? 63? 63 cents? It's holding up here. I don't know. Market cap down here, 154 million. That's what I'm saying, man. There's a name for that, and that's always interesting to me. When the stock goes down 50%, you need more than 50% to get back to where you were, right? Like you need 100%. Oh wow. So wise. BY's holding up here. Break of this high would be nice. Is this the high of the day, actually? Not quite. We opened up here at 38. I imagine much good, very good foe in Mexico. I got 3 short on the MES. I want more, but I'm gonna wait. Very curious if today gets an engulfing candle. Mucho curioso. Yeah, Spies or BY's holding these levels. I think math. I actually closed them out. I thought I was early on it and I got scared. They're expensive. But yeah, I mean, there's still that RSI divergence yesterday. And now that the SPY's looking like it is actually the top, maybe not as bad of a play anymore. We also have it on the daily there too. I just took a small loss on it. Big math guy. Yeah, BBY moving up a little bit more. It's only down 4.3% now. I'll think there's any news or anything. No news that I'm seeing. Yellen says IRS will release strategic operating plan for spending $80 billion in new 10-year funding. Amazon layoffs about 100 employees in its gaming division. Oh yeah, does Amazon have a live? Is there an Amazon live? That would make sense though. Don't they still on Twitch? U.S. Treasury, Yellen says, yeah, 80 billion, 10-year spending plan this week. White House, U.S. will continue to work with producers and others to ensure energy markets and lower prices for the American consumer after OPEC decision. Credit Suisse Chairman Axel Lehman has apologized to shareholders, says he's truly sorry for failing to stem a loss of trust in the bank. Two beans and that's it. So this could be kind of an invert head and shoulders here on SPY. A 5-minute. I should close out. We have multiple grays. Don't remind them. Yeah, I'm holding my GME contracts. That's why I got a lot of time. You never know. I do have some shorter ones actually. I have ones for April 25 strike, so those are down quite a bit. Yeah, I picked up some half-cent calls on BBBY for April. Video pump. BBBY only down 2.9%. Looky. 24 for May. Nice. The May, you have, I think you have... Yeah, you have earnings again in May. Comes up soon. 102 coming fast. So a hammer candle would be a bullish candle, especially if it's green. But again, this could just be something like this, where we just have a move back up to the moving average. But it is a little fresher breath air from the last 5 days where we've lost 50% of our value. No, 4 days. 1, 2, 3, 4. Yeah, 60%. Last 4 days, so my pleasure, Gene. Glad to hear. Yeah, I'm still bullish on GME. Hit that support today, and GM. Oh yeah, look at GME popping. It was getting a little dicey here this morning when SPY was plummeting too, and GME was getting at that support. But it actually held strong while SPY continued to move down. So that was even bullish to see the relative strength. And then, yeah, bounced off it once more. So it still looks good. It should have moved up. We have it. It's still a bull flag. At hours, you can see there's the pole. There's the flag. It's actually... Is that actually the yearly chart right there? I think it is. See that? Yeah, I'm gonna do that, and then we're gonna look at maybe more like weekly would be easier to see it. There you go. It's the fractals, man. It's alive. Have a look. There you go. This is over the course of the last 2 weeks, and this is over the course of the last 2 years. Not exactly the same, but SPY to get a little squeezy pop there though with some volume. BBBY down 2.7 now. About to fill this gap. About to make a new high on the day. You have 2024 calls? That's a lot. The IV is so low on GME, it's just crazy. Squeezy. Break even in 2.7%. What's your cost basis yesterday? Another short on the SPY. Maybe I'll wait.
Now is down about 0.5%. It's down for the first time in 5 days, sitting at 4,100. The Dow Jones Industrial Average 33,378.
We're really cheap on GME. One of the signs it's still broken, or fixed rather. However, if there is a crazy move and GME does get parabolic, and we see the IV that we've seen on it, these options are going to be insane. They're going to be such big gainers. They're going to print like crazy. Like 1,000%.
For some of the big stories in the markets,
it's gotta go
Renee
crazy,
Young is
still.
with us, senior markets correspondent here on the TD
My
Ameritrade
boy,
Network.
BBBY.
Taking a look at big movers in AI, artificial
How about
intelligence.
1.3?
One name we know very well, maybe some others less so. Tell us the story.
Well, we have one big down mover and one big up mover. I'm looking at C3 AI, and those shares are down more than 26% on reports that it has concerning data in its accounting and its disclosure area. And that comes from Carryside Capital, which sent a letter to C3 AI's auditor, Deloitte, regarding what it calls serious accounting and disclosure issues. Now, in the letter, Carryside says that they discuss the highly conspicuous growth in unbilled receivables to the levels that they've never seen before in software companies. And Carryside also says that they noticed opaque, confusing, and highly concerning disclosures and financials related to the company's related party and their very large customer, Baker Hughes. Now, this is a huge fall for C3 AI, which is still up, by the way, 122% so far this year on that generative AI boost.
Bad little bounce
but
on the
we'll
bottom.
find out if this has any impact, any
Looks
lasting
like it wants to go
impact.
green and
Now, the other
maybe even break
upside
yesterday's
AI
highs.
company is Bullfrog AI Holdings. It's up more than 26%. It signed a global licensing agreement with Johns Hopkins University's Applied Physics Laboratory. And it's for the use of the patented technology that powers Bullfrog's program. The platform analyzes huge data sets, drug development data specifically, and the technology is supposed to help them detect any anomalies, patterns, or relationships that are in the data.
You know, as I look through this, and I just wanted to be sure before I said it, but we always have to remember where everything comes from here. You know, to your point, C3 AI with a big move here of down more than 23%, but it's coming from Carrysdale, which talking to Deloitte about this and their concerns about how they're doing the accounting over at AI, C3 AI. But at the same time, Carrysdale has publicly disclosed that it is in fact a short seller, betting that those C3 shares will fall. So that always makes me take it all with a grain of salt. Not that I don't believe them, but when a short seller sort of points out mishaps, then you start to wonder that. Can we get to the chips? I know you're talking about GM and Ford, and you have some big news on that as well.
Yes, two big blue chip stocks. We're looking at GM and Ford. GM says that 5,000 of its employees have accepted voluntary buyouts. And this is after the company asked employees who would be willing to do this over the past, recently, I should
GME,
say.
profit
Now,
nice,
these are 5,000 salaried workers. They
Down
include some
2.4.
executives. The
Bounced off
buyouts
that
are
level
expected
today,
to cost the
22.
company about $1 billion,
Continuing to
or rather,
show
they will
support
take
there.
a $1 billion charge in connection with these buyouts
Also
for
kind
the
of
first quarter.
these two lines
And
are
it's part of a
converging here.
bigger effort to cut $2 billion in costs by the end of 2024. But from these buyouts, GM is expecting that it'll be able to do at least the 50% of its $2 billion goal to save costs this year. So it's hoping that it'll be able to do that. And the company will also have other cost-cutting measures. They're going to reduce vehicle complexity. They'll be expanding the use of the shared systems, subsystems between their gas-powered cars and their electric vehicles. They also plan to include some decreasing spending plans across all parts of the company. Meanwhile, Ford released its first quarter sales, and the company did sell close to 500,000 vehicles in the first quarter. It was about a 10% rise from the same period a year ago, and electric vehicles in Q1 were up 41% year on year to just under 11,000. And then lastly, I'll give you this. Ford said that sales of the F-150 Lightning pickup truck model, they were at about 4,200 in the quarter.
All right. Thank you for all of that, Renita Young. Good look at some important stories there. Appreciate it. Now let's take a look at the bigger picture. Joining me right now, Ed Siddell's with us, CEO, Chief Investment Advisor, EGSI Financial. Ed Siddell, nice to see you. Let's just start out with what we've been seeing in these commodities. I'll talk about OPEC and the production cut in particular, with oil above $80 the barrel and dollar at the lowest levels since February. What does that mean, and why is that important?
Yeah, it's a big deal. First of all, thanks for having me back. You know, when we look at the production of oil being cut, I mean, we went from being an energy exporter, being completely energy independent, exporting oil to, now we're having to import everything. And that's a big deal because it impacts every facet of our life, not just transportation, but, everyday goods, as well as, even pharmaceuticals. So cutting that production, it's just going to continue to raise costs, which is inflationary all the way across the board. So that's a big deal. As the value continues to devalue, I was just looking at it right before I came on. It was about 101.62. It's not as low as it was the 1st of February, but it continues to go down. And, as we continue to see inflationary pressures, depending on what the Feds do, I would not be surprised if we see it break 100 and be in the 90s before the end of the year.
Right, understood. In the meantime, there are concerns about inflation. The question is what the Fed may or may not do in its next meeting after the
We're getting later in the day now. It's already 10 after 2.
Percent hike, quarter of 1%, 25 basis points. Jamie Dimon actually noted what has happened in the banking crisis, and that in fact it's not over, and that the repercussions could be around for years to come. What do you make of it all, and what does the Fed do?
You know what? I agree. And this goes back to what we've been talking about, even last time we were talking about the debt bubble. There's so much debt that these banks are holding, from commercial real estate to corporations. They've had to extend themselves out to get any kind of return, on these longer term treasuries. And they just can't make a profit. So this is more system-wide than what anyone, even thinks. And so, the impact that this is going to have, as far as the Feds look at, especially with the inflationary pressures, of commodities, specifically oil, they're going to have to make a choice. They continue to say, you know what, we're going to hold steadfast to that 2% inflationary rule. But if they do that, they're going to have to continue to raise rates, and it's going to wind up breaking the economy and create a very large financial crisis. Now, the other option is they don't raise rates, and they even may do another round of start to lower rates and may even do another round of quantitative easing, which would create just a huge inflationary issue. So I think it was their poor monetary policy, their inaction over the last couple of years that really put us in this situation. And so no matter what, it's going to be tough.
So at this point now, you actually see 5%. Some rate cuts ahead at some point.
On the trend
Do you think that's more likely at the end of this year or more in 2024?
You know, unfortunately, as early as the end of this year. You know, we need growth in the economy to kind of get out of this mess. We need some real GDP growth. And, you know, we need some business-friendly credit loosening so small businesses can start to grow and create some more jobs. And I think the only way that we're going to be able to see that is by lowering some of the interest rates to create more capital for these companies. But again, you know, that's a double-edged coin because, you know, that's going to be more inflationary pressures, you know, for the country.
Right, understood. At this point now, with a dollar that's relatively low, what do you think U.S. investors should be doing or putting their money to work or what?
Yeah, you know, right now it's all about hedging. You know, before the end of last year, I said, you know, I was being cautiously optimistic, but now it's really about hedging, making sure that you stay liquid enough and generating, you know, a good enough return, you know, laddering out some short-term treasuries, but still participating in the market. You know, I continue to like oil. I like energy, utilities, healthcare, maybe even consumer staples going into all the way through the summer. But, you know, you need to stay liquid, get a very modest return so that if things do turn around, you can take advantage of it. But, you know, you need to make sure that you understand all the volatility and risk involved with everything that's going on in the market.
Right, understand. All right, Ed Siddell, nice to see you. Thank you, CEO, Chief Investment Advisor, EGSI Financial. Thanks, Ed. Later this hour, the founder and CEO of RingCentral will drop by with his insights into the company's latest AI technology. And we will take another look at the energy market. Will we see $100 a barrel for oil this summer? There are some bets on that. Our panel previews ConAgra Brands ahead of tomorrow morning's earnings report. And up next, we'll check on a few movers on the move.
Oh, BHS,
like Chipotle,
BHC,
Boeing, and
13%.
more. Stay with us right here on the watch list. We'll be right back.
Went to eat and I woke up. That's right. Go back to eat. You went and fat. Yeah, I did wake up. Certainly did. Only down 5%. Good start. Got some calls. The S&P 500's year-to-date rally has been driven by just 20 stocks, although Global Management Chief Economist Torsten Schlock says in a note, these stocks have seen market capitalization increase by nearly $2 trillion in 2023, while the remaining 480 stocks' market caps have risen just $170 billion. BBBY coming down a little bit. It's above VWAP still. See if it used that as support. GME is still strong. Moving up. Moving up. They're down 1.7 now. Verge only 10 cents difference. Crazy. It's true. I close out my bird shares. Still have the options on there. I didn't like it breaking down below here, and now it's using resistance. But that line could be, I don't know where I got that line. It looks like it's holding that support. I don't know. That's a bear flag. There's an inverted or a RSI divergence. It might come down a bit more.
S&P 500 down for the first day in 5. We had a great first quarter for stocks. I mean, when you think about the NASDAQ had its best quarter since 2020. But you have JP Morgan saying we're going to be testing lows. There's a lot of skepticism out there. What are you watching most closely in the charts of the S&P 500?
Well, initially here, I have no choice, but I got to watch the lows we've created today. They're coincident with the high we made back on March 6th, which makes a little bit of sense because we popped through that ledge on Friday and we continued higher with a move yesterday and traded even above yesterday's high early today. You're right. We're seeing a little bit of weakness here. And I guess the negativity, honestly, has been quite pervasive for 3.5, 4 weeks now. And yet the market has pushed us right back to where we were. In fact, ahead of the banking crisis we experienced at the beginning of the month in March. So I would start to believe to a certain extent that maybe the bearishness got too far, and that has maybe led us to this recent rally back. I guess the question now is, do we hold the lows of the day, giving short-term bulls yet again a chance to challenge the peak we saw in February, our February high there at 41.95, and if we can get through that, then we're looking at the August peak at around 42.90, excuse me. So we still have some levels of interest, and to be quite honest, we're not giving up a whole lot in the short run. Now, today's closing candle on the SPX could have some short-term impact for us. Obviously, if that finishes at the lows, it would be a bearish engulfing candle after a great push higher. So some would expect a little bit of short-term weakness. I'm certainly watching to see how we finish out the day, Nicole.
Yeah, I mean, it sounds like, I mean, originally you wrote here, the path of least resistance appears upward. And I do like the optimism giving us some of those possible peaks.
We're literally out of resistance to make an engulfing candle here. It doesn't seem like short term.
That being said, let's talk about Hovnanian, because Hovnanian has already had a great 2023. Your thoughts on this home builder?
Well, you're right. Up 60% year to date at yesterday's close. The chart looks really interesting because what you've done is consolidate after a fantastic push. The biggest rally is that 60% move. We pushed from the basically right at 41 or so at the beginning of the year up to 74. So a really solid 70+%. And all we've done is just hold serve, so to speak. A couple of things the bulls really like here. One, the lows since that excellent move to 74, the lows have come in line with the peak we got in last summer, June. So that's a perfect area for support to be represented. The fact is we've tested that level twice. We've also allowed the 50-day moving average to provide support. And if we go back and test, go back to about the 15th, 16th, 17th, we'll notice that in March, we've actually had higher lows all on the 50-day moving average. So there's a lot that are going to paint as opportunity here. Now, today you had a chance to break that downtrend line. It did not happen. Broad market sentiment has certainly kept it from doing so today. So I think a close under the 50-day would give bulls some caution here, perhaps. A chance to see the level that we're holding, the 61 in terms of support. But really the bullish nature of this chart only changes with closes below $61 a share, I would think.
Yeah. U.S. housing starts rise, permits rise, existing home sales rise. I mean, it's pretty amazing when you think about the back and forth action we've seen in
shoulder
housing
line
and the
on the inverse,
volatility of
head and
what we're seeing
shoulders.
with mortgage rates. But
Breaks below
good
here,
news
it's
for a name
kind
like
of
Hovnanian, which you noted is up over
failing.
50, 60%
Engulfing
this
candle
year.
there on the 5
When I
minute.
looked at the ETF of the home builders,
good for a
different
short.
story. I was actually expecting to see. I know it recently hit some new highs, but it's certainly
one
not
here.
as impressive. It's the XHB is up just 9%. I sort of expect, I hadn't checked on it in a little bit, and I sort of thought it was going to be higher, but that has pulled back some. Any final quick thought before we get to Etsy?
I think it's probably tied to the fact that a portion of that portfolio is in building material as well, Nicole. So while home builders you've seen collectively have gone higher, a lot of those names you named it, not just Hovnanian, but I brought you Taylor Morrison in the last few weeks as well. So there's a lot of names that have been doing well, but they are the builders in that space, not the materials in that space. And so material costs continue to be a little bit high. That could have some bearing on why you're not witnessing the participation out of the XHB quite to the same extent.
It's better than Toll Brothers. It's better than Pulte Group. But, you know, I'm out of time on this story, so I'll go to the next one.
Okay.
You're right.
You got it.
Sherwin-Williams is down 5%, so I see what you're saying. Okay, let's get to Etsy.
You got it. So Etsy, great news on this one this morning. Got a nice little pop, pushed us into resistance. The problem is that, Nicole, it pushed us right to resistance, the same spot that we fell from. If we just took a look at what has gone on since this thing broke down below the 200-day moving average, the level we're eyeballing is 115, and today's highs were right there. It's the same level we saw here in late March, March 22, March 23, and so you've not had quite the continuation because we opened at that level. The open was right over 114.60, and all we've done is sell down today. So at this point, it's a patient move. It doesn't look fantastic in the chart because of the break of the trend line and the potential for us having tested that trend line once more in this level at 115. But I think bulls are waiting for a close over 115. Now, if this trades below the low that we made yesterday, which will take you down around 106, then things get a bit less excitable. Could easily see 100 thereafter, and then we've got lows that we have to look at back in September through November of last year around 94. So, you know, this is a bit precarious on the long side right now. Probably a watch list position. Could be a potential bear setup with a break of the recent uptrend working from late March.
All right. Thank you for that. Appreciate it. Good to see you, Kevin Horner. Glad you were with us today. Technical Tuesday. Good themes there to take a look at. Hovnanian and Etsy. Thanks, Kevin. Senior Manager Trading Services Education at Charles Schwab. All right, up next, we're going one-on-one with the CEO of RingCentral to talk about his company's new artificial intelligence platform. Next.
I'm moving down here, breaking down below that shoulder line. Wish Jenny was those. GME following suit. Bed Bath still above VWAP. Great day when Bed Bath & Beyond is only down 7.2%. Highs coming down here. 408, it's down 0.68%.
down almost 32 points at 40.92. That's 0.75%. The Dow's down 379, down 0.8%.
I moved back
the
down.
Nasdaq is down 0.5% at 13,078, and the
Level from
Russell
before,
accelerating losses now down 2.2% at 1762. It's time to check in on developing story. This is a big one. Jenny Horns with us, markets correspondent, talking about the movement that we've seen in the space industry in a couple of big names. Tell us more about it.
Right, not such positive news here, Nicole.
Yeah, the inverted head and shoulders broke.
Did announce filing for Chapter 11 bankruptcy now in order to effectuate a sale of its business. Now, the company plans to use the Chapter 11 proceeds to maximize its value for also its business as well as its assets, it said. The announcement comes just days after the company did announce cutting a majority of its workforce due to the inability to raise sufficient capital to continue operating its business as usual. The CEO of Virgin Orbit said that while they have taken great efforts to address their financial position and secure additional financing, they must ultimately do what is best for their business. And they believe that the cutting-edge launch technology that this team has created will have a wide appeal to buyers as they continue to process to sell the overall company. To help fund the process and protect its operations, Virgin Investments made a commitment to provide about $31 million in new and debtor in possession financing. Virgin Orbit did say it's very focused on completing the sale as soon as possible, but we're also seeing that weakness now weigh in on Virgin Galactic today. You can see it's down almost 12%, which feels like a drop in the bucket, relatively speaking, compared to Virgin Orbit, which is down over 28.5%. This name is now down about 98% off of its 52-week high, just about 3% off its 52-week low. So seeing some massive selling today. But important to keep in mind that a Chapter 11 bankruptcy filing does not necessarily mean doom and gloom for a company. We've seen other names turn around pretty substantially. Hertz, one that comes to mind. Revlon was another name that we saw some wild price activity following that Chapter 11 filing. So this is not necessarily a doomsday call for Virgin Orbit shares, but it's definitely not what you as a shareholder would like to see on top of now several quarters of no profitability and some really disappointing returns. So interesting development. I would say that if you've been paying attention to this name or Virgin Galactic, it's not necessarily shocking as this is a fairly novel, fairly expensive space, frankly.
Yeah, without a doubt. But this 29, I mean, basically it's down to nothing at this point. Jenny Horn, thank you for that story. Appreciate it. And we'll continue to watch Sir Richard Branson and his next move. Thank you.
Literally wicked all the way back up to that support level.
All right, now let's turn our attention over to energy. We're looking at these markets closely. David Holtz with us, President Consumer Energy Alliance, joining me right now here on the watch list, because obviously we had the OPEC Plus cuts yesterday, and oil moved higher above $80 the barrel, and there are some bets in the options market really looking closer to $100 a barrel. Where do you think is the path of least resistance for oil?
Oh, it's going to go up. I think you know, you look back over the last 2 years, there's not a lot of movement. There's nothing more that the Biden administration can really do. They've sold off the majority of the Strategic Petroleum Reserve. It's clear that the OPEC nations aren't really responding to U.S. requests to kind of maintain production. The United States, you know, has a lot of production that we can rely on ourselves, but this administration seems reluctant to rely on oil and natural gas. So we're sort of in a little bit of predicament. We do think that prices will continue to go up.
Yeah, it's gray and short and curly now.
Whether or not they get to $100 barrel is going to be the open question, because at some point, because the price of gasoline, the price of diesel as related to the price of oil goes up, the price for all commodities start going up again, which puts, you know, obviously more inflationary pressure on the situation, but also puts recessionary pressure on the overall economy. So once you have a recession, then demand starts going down a little bit, which puts downward pressure on the price of oil, natural gas, gasoline, and diesel.
Still a gap up.
So we're in a little bit of a predicament here. We certainly think near term price of oil is going to go up, but what that does to the overall economy, that's going to be the big question.
Right, and Russia will extend its 500,000 barrel per day cut. I know some action happens in July, but the big picture is that OPEC Plus, this cartel, made these voluntarily. What do you think was behind the move? And, you know, it matters, of course, at the pump. We've
Relation.
already seen a jump, I think,
Yeah,
about
but is it
30%.
isn't actually island
30
bottom?
cents, right?
Yeah, it looks
Yeah,
like
I think we had a
accumulation.
6% increase in the price of oil
But to me, it's
yesterday, which is the
accumulation after a
largest
down move,
single-day increase we've had in
I guess
well
not
over a
necessarily
year.
accumulation, but
So it's fairly
consolidation.
significant. So it's
I'm just wondering
you
if
know,
that is an island
with
bottom.
OPEC controlling now more of the global oil
It looked
output,
like it yesterday. It
global
still
oil,
does today, but
supply. As the United States reduces its oil supply output, the United States has less of an impact
that
on
head and
global
shoulders
oil
up there.
supplies. So several years ago, the United
that's
States
maybe
was
what
the
this move
#1
already-
oil producer and the #1
already
natural
had
gas
that.
producer in the world. So we really had a lot of sway in global oil supplies. We don't have quite as much sway now as we did previously. So I think we see OPEC nations led by the Saudis putting
Lift is up
pressure
5.5.
on that price of a barrel of oil to try to maximize profits a little bit. But there are things I think this administration and the United States could do to increase productions and signals to global oil markets to kind of put downward pressure. It just remains to be seen if this administration is going to do that.
Go.
Yeah, and as we look at that, right, and it's other nations too. We mentioned Saudi Arabia and Russia in particular, but the other nations will also curb production as well. In the meantime, what about the other things that we watch so closely? I mean, you know, nat gas, we talked about gasoline a little bit, but the demand as we get into the fall, you know, heating season, hurricane season, spring driving season, summer, I mean, there's going to be a lot of demand. So is that why you're talking about $100 oil? Is that what you're thinking? Or more?
Yeah, you know, that's certainly, all those things go into the upward pressure of the price of oil, right? The United States is still the #1 nation in consuming oil in the world. About 80%, 82% of our overall energy supply comes from oil and natural gas, and that's remained pretty steady over the last couple of years. And then when you get into the price of diesel, then the price of food, the price of lumber, the price of shoes, the price of clothing, all our commodities that are delivered by truck, there's put upward pressure on the price of all those commodities. So consumers and families and small businesses everywhere, you know, it takes money out of their pocketbook.
And as we saw oil jumping 6% last week, you know, it's moved higher this week as well. So we're seeing that continued trend. In the meantime, what does this mean for households? I know that many people like to think about solar panels and wind and all that, but the real deal, I mean, there was concern. You remember when we were talking about energy and the costs it would have that moved up 50% for those in Europe. It can really hit the bottom line of a household.
Oh, it absolutely can. You know, and we are diversifying our energy economy. We are adding more solar and more wind. We're trying to build out more transmission to get solar and wind to more households. But we have to remember that our energy policy, our energy situation must be an integrated approach. We can't abandon oil and natural gas because they are going to be still a dominant energy resource for years and years, if not decades and decades to come. So while we diversify our energy portfolio, while we add renewables to the mix, oil and natural gas will still be a large part of it. So you mentioned the summer driving season, which is about to happen, that traditionally starts in late May. Also, we have some refinery turnovers in May to meet summertime gasoline standards that the federal government requires. That typically also increases the price of gasoline and diesel fuel. So all this is occurring just as families are thinking about taking that long trip, taking that family vacation. We are looking at electricity prices that continue to be pretty high. While we see what OPEC Plus has just done and what the markets have done in response, making sure that we're meeting our energy needs, making sure that we're permitting enough onshore and offshore oil and natural gas fields here at home, that's got to be a pretty dominant part of the Biden response to all this situation.
And as we look at the oil forecast here for 2023, I think it's really important to note, you know, we say nat gas, but really oil at $80 the barrel is pretty much flat for this year. But nat gas, in fact, is down over 50%. And it's only April, just this year. What does that mean? Why is that important to note?
Well, the natural gas market has been kind of in a state of flux. It's pretty low right now and has been for a little while, but then we saw some peaks over the last 12 months. So it's notable because natural gas continues to be the dominant energy resource that's supplying our electricity markets around the nation. So we need to make sure that we're maintaining adequate supplies of natural gas. We have some areas of the country like the New England states and California that continue to restrict natural gas and natural gas pipelines. We would argue that that would be a strategic policy mistake. Natural gas needs to be kind of an additional energy resource when you're adding wind and solar to make sure that that households and businesses can get electricity when the wind is not blowing and the sun is not shining. Natural gas is a really good energy resource to make sure we're powering our homes and our businesses.
Right, understood. David Holt, great to have you on the show. Thank you so much. President, Consumer Energy Alliance. Thanks, David.
Thank you.
Still ahead, we're bringing our panel to discuss ConAgra ahead of its earnings. That's tomorrow. So let's get the details, the potential strengths, weaknesses, what we need to know about the consumer staples sector coming up.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the income investing course and a whole lot more.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week on TDAmeritradeNetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the income investing course and a whole lot more.
We empower those who act, those who see the correlation.
UNG at 6.6. Certainly is. Waiting for a bottom on that thing. Sean is a smart man. So you are just like scalping it. You think it's in a longer move, but you don't hold your options. I've noticed. Just ride them intraday. But you're still getting longer dated options. Which makes sense, it's safer. Only my favorite, like, don't ever want to sell options. I want to just hold it for the whole move. Buy more. But it makes sense. Especially, of course, if it's shorter dated and you're out of the money, sell them on pump. But Rivian keeps going up. 0.3 above VWAP. Hold some cash cleared puts on it. I did get back into actually MES shorts. Basically where I closed that last one, I'm back in. Just wicked or just ripped up to that resistance, and now it's still there. So I think it's looking bearish, and we're getting a bear flag on the hourly. That divergence is still there, of course. And we might get a daily engulfing. Got about 7 minutes till CNS closes. See what that brings. Oh, so it's more percentage for you. Let's see.
So they do have, if people start trading down, that could hurt them a little bit more than perhaps before, because they don't have quite the presence there. So that's one negative. But positively, I mean, looking at them versus their competitors, I mean, you know, their PE, forward PE is like 14 versus like 17 to 18. I think Campbell's is at 18 forward PE, Kellogg's is at 17. So I think they are probably, you know, undervalued a little bit vis-a-vis their peers. So that's something I'm also watching.
Bird's Eye, Banquet, Healthy Choice, Slim Jim, Ready Whip, Vlasic. Oh, I love those. I mean, just what a great lineup they have. And what's interesting, Arun, is that Walmart, huge customer for this name. Tell me about the relationship as we talk about the margins with some of these big retailers, these big box retailers. You follow that closely. It must make a big difference.
Yeah, so for Conagra, you know, Walmart is its biggest customer. It was about 27% of its annual sales last fiscal year. And really, its top 18 customers represent about 80% of Conagra's shipments. So they are, you know, more concentrated in that sense to a few very large retailers. But, you know, right now the conversations, I think, you know, have changed a little bit. You know, over the past 2 years, packaged food companies, including Conagra, have been able to go to their retail customers and relatively easily implement price increases. But now going forward, I think those conversations are a little bit tougher. Retailers are going to likely push back and really, you know, make sure that any future price increases are justified. But the good news is for Conagra, its cost pressures are moderating. You know, last quarter, Conagra actually lowered its cost inflation outlook. Its cost inflation outlook for the year was in the mid-teen percentage range, but they actually lowered that cost inflation outlook to 10%, citing lower protein costs. So that's the first time that we've heard a packaged food company cite or lower their cost inflation outlook. So that's a good sign for the whole inflation story. Shows that cost pressures are moderating, meaning, you know, the price increases should also moderate in the future as well.
It's interesting because, you know, here on the note, Arun, you have both higher prices will drive sales, and at the same time, we expect promotional activity to increase. And I understand how those are both possible, even at the same time. Do you want to give me a quick 10 seconds on that before I go to Lee, Arun?
Yeah, so I mean, these are price increases that they've already implemented. If they implemented it last
I
quarter,
just noticed the icon for Twitter is
of price
Doge.
increases. So that's going to have this wraparound effect to their quarterly results. But promotional activity, that's likely
because
going
it's
to
rallying, or
increase.
is that why it's rallying, or
because more companies are promoting, supply chains are normalizing, but the net effect is going to be higher prices.
You guys seen that?
All right, millennials, Gen Z's settling down. Any other
This is
final
Twitter.
quick thoughts here?
Am I on like a hacked version of Twitter?
Right. It's been kind of proven historically that when in fact households start having kids, their frozen food consumption goes up. So they are planning to have that as a tailwind. The other thing I would notice on them real quick is, you know, there's both positives and negatives in the sense they pay less in R&D than a lot of their competitors. But on the positive side, they do have this renewal rate, which they look at. They make a new product, or
I saw Doge's rally. I didn't realize that was why.
And then they see what the renewal rate is, and that's been increasing from 8.5% a while ago to over 15%. So I think while they're spending less than their competitors in the R&D, I think they are still managing that process pretty well.
Thank you both. Arun Sundaram of CFRA and Lee Bull of Charles Schwab. Thank you. Good luck there at Conagra ahead of tomorrow's earnings. That's going to do it for us here on the watch list. Thanks for being with me. I'm Nicole Benevides. Down arrows here. We snapped the recent win streak for the S&P 500. Oliver Rennick has you covered, though, next on Market on Close.
I kind of jumped around down here. I did grab some more shorts right about here. 4.4, 4.14. How about today? 4.14? No. Tomorrow? I don't know. A lot of my indicators are showing this at the top. Curious how well GME holds up with SPY coming down. For happy, or no, yeah, for happy money, anything. Ace, can you dub over that on Happy Gilmore? Bias at that level. You could even do Biden's voice with it, that'd be pretty funny. Different voice too. Or no, you could do this guy's voice probably.
Hey, Donald, can we get a little time here? For Happy Gilmore, anything. Thanks.
Yeah, GME broke below VWAP. For Happy Gilmore, anything. Nailed it. Oh, I might be like an upside for Power Hour. I'll close them out here. Very well rip back to VWAP before end of day, or even higher.
The fact this is happening at multi-year levels for gold makes it even more impressive. It really suggests here that the market is, on the one hand, still a little concerned about inflation, but also very concerned here about an economic slowdown. So perhaps then the steam is running out of this bad is good trade. It seems like bad is gold, basically, at this moment, where that's really the only asset working. Investors are buying bonds as safety, and it looks like they're actually also buying gold as safety. That's pretty impressive because gold did very well during the inflationary regime last year, preserving its value, not declining alongside stocks, alongside Bitcoin. And so the fact that now it can also thrive in an environment where maybe inflation is losing a little bit of its ranking in our list of concerns to an actual recession.
I think I like
gold
the top
works
here,
in
though.
all these environments. Suddenly, that's looking like exactly what the bugs have told us it should be and what it should do. So this is definitely happening at the dismay of the coiner crowd, because Bitcoin is flat on the day. And they're the ones that have said they will be the great beneficiaries of a trapped Fed or a stagflationary environment.
Yeah, not much data this week until Friday when we close.
Huge here today, but the relationship between them and the way it's playing out in the market relative to
tomorrow,
those
trade balance,
soft jobs data is a very big
S&P
deal.
final
And
US services
potentially
PMI.
really a regime change if it
I guess initial
happens
jobless
a lot,
claims on
if it happens
Thursday.
at a larger scale. This is, though, the type of situation that we want to watch for
Then
if
Bullard
the
speaks at
bad
10.
is good regime ends. All right, look at the KRE, by the way, the regional banks real quick, because they're hurting too, and man, this chart is not good. Just a heads up, the price action for these companies may not be over. The story may not be over. Watch the technicals as the regional bank ETF looks like it could be very well poised to break again, even without any major glaring new news on the financials. Let's bring in Kevin Hanks, Renita Young, and let's kind of go back to this morning where we started. Kevin, Kev's going to talk to us about some of this data. We're getting Kev on the line, Renita, but really it began this morning with the jobs number because we're kind of used to seeing this certain response. We didn't quite get that today. It kind of just looks like people generally don't know what to do except buy bonds and buy gold.
And I think that's where we're at. You know, people are kind of still trying to figure out how do I react in this particular type of environment where we see all the macro pressures happening, but we also see the other side of the coin, so to speak, and we're wondering just how to position ourselves for it. The jobs number, or JOLTS number rather, did not come in as 100% expected, but folks are just trying to figure out how to trade around it now, right? And so when the complete picture sees itself fully through the end of the week, where we have jobs numbers coming on Friday for March, we'll find out just how folks are interpreting the whole picture of it. That's what I think people are waiting on, just the full picture.
Totally. Right now, it looks like that picture is kind of filled with negative things. Mm-hmm. It's filled with inflation, as we just saw, was still high. It's also filled with potentially a slowdown in employment. But we're going to get the final numbers on Friday. But in the meantime, there's just kind of a lot of negativity in the air. Jamie Dimon this morning we talked about as well. And then the other side of JP Morgan and their strategy team has a pretty negative note out. So there's a lot here to choose from for the Bears, at least today.
A lot for the Bears to choose from. Seeing this negative note really did cast a shadow over what's happening with banks already, as well as what will be seen within markets through the end of the year. The specifics will definitely work themselves out pretty soon. But right now we're not seeing a whole lot of positive action at all. Even when we look at different sectors, we're definitely seeing consumer discretionary down. We're definitely seeing other sectors down on the day. And many of them have slightly been impacted in some way by this news.
Okay, so even though there is this tone out from Jamie Dimon, there is the Kolonovich note saying that the S&P is going to test new lows, the market's not doing the whole bad is good thing. Kevin Hanks, I mean, we're only down 0.5% in the NASDAQ, a little bit more in the S&Ps. The Russell's getting smashed. So, I mean, is this an okay day considering some of these headlines, or should we start to be a little bit worried here about how the market's going to respond to softening data?
BBBY.
Well, Oliver, you know that when we've been
very
watching
boring.
these markets, most investors only watch the top three. They watch the S&P, NASDAQ, and Dow. But the warning signs are really coming from the Russell, as you know. Russell down 2.2%. Such a big sample size full of these regional banks. And you know when Jamie Dimon come out and says it's not over, the banking crisis isn't over, that then you see the reaction in the Russell, and a market that took the JOLTS data favorably at first. The knee-jerk reaction was higher for most stocks and futures, and then it just lost its inertia on the upside. And now it's drifting off the lows here. I mean, we're not closing or at or near the lows, but certainly financials are weak, Oliver. You know, you've got a couple of key downgrades. The Boeing downgrade was pretty significant. I guess I could be concerned
with someone
overall,
exercising.
This is a market a week away from earnings. From first quarter earnings that's getting jittery. And this note from JP Morgan that you already mentioned, that let's face it, the language here is harsh on the overall market. It's a bit unnerving, I think, for some of these markets, especially watching the Russell go down more than 2%.
More dollars.
Yeah, to see the small caps really get hit here, regional banks under some pressure, even without any major stories there. I guess Dimon's commentary this morning, perhaps, still kind of weighing there to some extent, you think, Kev? Because other than that, I mean, it seems like a lot of the fundamental story has been pretty quiet for the banks, but they're trashing them today.
Yeah, there's no headline news on the banks, but Jamie Dimon's comments, Jamie Dimon can move markets. He always has. There's no more high-profile leader of the financials for a long period of time than Jamie Dimon. So I was involved with him through Bank One, and so when he moved over to JP Morgan, when JP Morgan took over Bank One, and he has been a major player in banking since really 2000. You know, right at the turn of the decade or the century here, he's been a big player in banking. There's no more high-profile guy. So his annual note, yeah, it catches people's attention, Oliver. And did that play a role in banking today in regional banks? It may have. Also, the note from JP Morgan, like I said, wasn't a good note.
Sure.
Basically saying that this rally was a dead cat bounce. Now, those are harsh terms for a market that's rallied as far as it did. So these markets jittery going into first quarter earnings, not really surprising. The VIX not taking off, still below 20. So we're not talking about any sharp, but this is a market that tried to rally today and failed, Oliver.
All right. Yeah, tried, failed, and certainly small, maybe compared to the strength that we've had, but still a standout day here so far. Thanks for in, Kevin. Hank, appreciate it, guys. Joining us, Peter Cheers, ahead of macro strategy at Academy Securities. Peter, do we maybe finally cross that Rubicon here, where bad data actually correlates to poor performance in stocks, or do we need to see some more evidence?
From the lows, so
I think we're getting to that point. I think we've kind of had this long duration equity sort of rally as rates were coming down. And now it looks, the data's been continuously weak. And at the same time, we're going to see inflation pressures coming on oil as OPEC Plus cuts back. So I think that's a rude awakening. And I do think we should get a more traditional risk off move with lower yields and lower stocks.
Right now, bonds are, to your point, lower yields, trying to punch down through 3.5. What do you think that signals if we really break through a level that has held over and over and over again? That's basically been a wall at 3.4 to 3.5 for the 10-year. We're really testing it.
I think it's really a signal that people think the Fed made a mistake last week when they hiked. And they should not have hiked. I think there's real fear out there that the economy's slowing. So I think we could break much lower in yields. And it's very tricky right now because Friday is really a half day, very low liquidity.
What was your position size?
Yet some huge data coming out. So I think we're poised to see kind of quite a rip fest in the bond market.
Okay. So this is a rip fest that gets us where? I mean, are we talking 3%?
I don't think we go that far, but I could see sub 330, maybe down to 320 on the 10s, which would be way lower than I would think we should be, but possible. We might even test, 350 on the 2s.
All right. Well, that would certainly make for a major regime change. Is there anything in stocks that works, or is this purely a stock short trade at this point? Because you've got this move in crude, you mentioned it's got some of the energy stuff up yesterday, but then when you have this kind of economic concern, selling of cyclicals, all those stocks get killed. So where's the hideout?
Right now I'd be trading more from the short side. I would be trading kind of the aggressive stocks that have run up the most. And I would be looking to buy the Russell 2000. I'm not there yet. I want to watch that, but it's underperformed by a lot relative to equities, which is, unusual a little bit to begin with. But then on top of that, it's underperformed versus high yield. And I always view investment grade and the S&P 500 somewhat correlated, so I look at the spreads there. And when I think about the Russell 2000, I think a little bit more about high yield spreads, and they've been pretty tame. So I'm going to look for an entry point in the Russell 2000 to take my long positions.
Okay. And the banks included there, because that's the problem area today.
Yeah, I think the banks probably are going to go under a little bit more pressure. The one thing is, I want to be very clear, I'm no longer worried at all about bank deposits in terms of a safety risk.
Yeah,
I
the
think bank
stream might
deposits
get
are
cut
going to
off
get paid, they're going to be protected.
Today.
That's not the concern. What I am
concerned
is everyone's a little bit more aware of what they earn on bank deposits versus what's available elsewhere. So I think you're going to see ongoing pressure on people keeping money in the banks. It's just not very efficient right now, given the yield differential.
Just on the recap video,
they're going to have to compete, or you're going to see a slow bleed on deposits.
Open our Discord server.
And it's not an urgent, it's not a credit
comment
risk
down.
thing.
Happy money sticks around. I'm going to stick around. I think it might cut off, but
on my money,
if it doesn't,
but it'll play out over time.
For another 15 minutes or so.
Where is the
recap video
wild card here? The market, I think, could be a wild card itself if people get caught off guard by this pivot from bad being good, that the Fed is no longer the number one kind of issue as far as inflation goes. It's a little different than 2022. But then is there anything else?
About how much capital,
I know you watch geopolitics very carefully. Is there any surprise in that regard? I mean, what could be in left field?
Yeah, so I'm watching two surprises. Unfortunately, I think they're both negative right now. One is we could see China turn around and start selling weapons to Russia, right? I think the
it does cut off.
whole Russia
Might be
peace
right
ploy
now.
was just that, a ploy. And I think with so many people backing the Chinese, reopening trade, that the Chinese economy is getting its, on its footing, it would be a big shock, I think, to the market if China starts to sell or indicate they would sell weapons to Russia, and that would destroy that part of the trade. So I think that would be very negative. And we're just starting to see in the past few days people trading bonds kind of to funny yields in and around to the end of July. So the bond market is at the early stages of thinking about what it might look like as we hit this debt ceiling kind of cap, which people are predicting somewhere late July, maybe into August. So that would be another surprise if people really start putting that on their radar right now.
Okay. All right. The China story seems like it's gone a little bit underappreciated. The recovery was kind of this potential catalyst, the China reopening trade. But I guess maybe that might take a little bit of a backseat here now that it's flowing into what, like a geopolitical threat trade again?
Shorts.
I think China, clearly with Alibaba and some of these companies trying to do splitting up, are trying to make the right sounds to attract U.S. investors. I think it's going to be a head fake, and nothing has really changed at the top. There's an incredible amount of friction between us and China, and that is going to continue. And China is coalescing with the autocratic, resource-rich nations of the world. They're doing more and more together. To me, it's no surprise that OPEC Plus, went and cut production. And that's how I see the world shaping, is that you have this China-centric, autocratic, resource-rich nations working more and more together and leaving us a little bit in the cold. And that's, I think, how we have to play this. And to me, that's dangerous. And we're being far too complacent about that.
All right. That's pretty much everything, except I didn't ask you about gold specifically. Are you a believer in this potential gold breakout, Peter? It's like the bugs, what they've always dreamed of.
I am not. I really don't believe in gold as a long-term asset. I don't ever short it. I just don't really trade it. It's not that exciting to me. And I think Bitcoin will flounder as well here because it's not going to solve the problems that we're facing.
All right. Well, thanks for walking us through the stuff that you do watch, do trade, and care about. Always appreciate the specific positions, and great convo, Peter. We pretty much hit it all.
Thanks a lot.
You got it. Head of Macro Strategy at Academy Securities. All right. That's a lot of macro discussion to start off the show. Let's dive into a stock that's gone a little bit overlooked in its own turnaround story. J&J, the consumer staple giant, has been beleaguered by legal problems, but the market's trying to suggest maybe the tide is turning. We'll be joined by an analyst who covers the stock next.
4.5. The GME. Worst on. I'm moving up there. There's a new little breakout there on SPY. Broke through that 408 level. 408.44. 4892 is kind of the next little spot. And really, it's 409 though. 409.15. Then VWAP's down to 409.38, so might see a move to VWAP. Oh, and Rick. Some volatility here. Okay, I am actually gonna have to cut out now. Yeah, thanks for your guys' support. Ace, thanks for your dono, man, your gifted memberships. Truly a legend among mere mortals. Big hugs, thanks for your dono as well, guys. Thanks for your subscriptions. Thanks for ringing the bell. Thanks for your thumbs up. Thanks, Christopher. Catch you on the next one. I'll have a recap video, about 30 minutes. Did some trading today. Go over some technical analysis and everything in that. Thanks, Bluish. Thanks, Tainted. Thanks, Christopher. Thanks, Taryn. BBBY wasn't all bad today. Thanks, Jonathan. Alright, thanks, guys. Sub up, like up, comment down. Happy money sticks around. See you on Discord.